Donald Trump winning re-election. The president visits Kenosha, Wisconsin today. And Apple's production blitz. The tech giant asks suppliers to build at least 75 million 5G iPhones for later this year in a sign that demand is holding up. Matt.
Let's take a look at futures. They are higher here on the continent, lower in London this morning as a result of the bank holiday yesterday. London needs to play a little bit of catch up with the drops that we saw here yesterday. On the other hand, DAX futures are indicating a gain of, well, the futures contract at least is up 0.9%. FTSE futures now turning higher as well. Here's the cash trade. As each index starts trading live, it'll populate the left-hand column of this global macro movers screen. You can see the FTSE right out of the gate up 0.1%. So although futures were down most of the morning, they turned higher just before the cash trade, and now we're seeing, well, really little change there, but at least on the positive side of zero. Spain is trading up almost 1%. The IBEX in Madrid jumping right at the open. The CAC 40 also up at the open about 0.5% this morning. And interesting, if you take a look at I'm looking over 3 columns to UK 5-year bonds. Right now, you can see the buying is big in the UK 2-year and the UK 5-year as well, and as a result, you see big drops there in the yield. Back over to the left into the equity indexes. You see the FTSE MIB now open in Milan, up 0.7%. So we're looking across European markets at big gains as we look ahead to manufacturing data across the region this morning, and after kind of a big kind of losses across the board yesterday. Joining us now is Bilal Hafeez, Macro Hive CEO and founder. And Bilal, you know, we're looking at these gains, still waiting for the DAX to open, but on a day when we expect Peter Altmaier, the German economy minister, to come out and say that the pandemic didn't hit Germany's economy quite as hard as had previously been expected. Does the rebound look good to you?
Yes, I think it does, you know, and I think this has been one of the things we've been focusing a lot on at Macro Hive, just the nature of the rebound, particularly if you look on the manufacturing side. And so Germany, of course, is a manufacturing powerhouse. But in general, you know, the pandemic's really affected the service sector the most. And of course, the manufacturing sector has, you know, avoided some of the big declines we've seen. So Germany should, in general, do very well in such an environment. And generally speaking, data, not just this month, but over the last few months, has generally been surprising to the upside as well. So all the momentum really does suggest that some of the more negative views on the economy, whether it's Germany or other economies, were a bit too pessimistic early on during the COVID pandemic.
Good morning to you, Bilal. And how much stronger does that view drive the euro? If we see the euro here at 119.80, so up 0.4% again. Dollar weakness, of course, is a broad theme, but the euro is a manifestation of that we see very clearly this morning, and has been the case for a while. So how much stronger can the euro still get here?
Well, from a valuation perspective, at least, the euro is only moderately expensive. So, from a valuation perspective, we could certainly see a move towards 125, 130, if not higher. So at this stage, at least, valuations are not a limit to how high the euro can go. And moreover, I think, all the stories and the announcements we're getting from the Fed side all suggest that the US is really willing to keep real rates very, very low or negative for a prolonged period of time. And so that in general should keep the dollar weakening trend. And then that really just leaves a few currencies which can reflect that dollar weakness. And on top of that, if you look at the Europeans' current account surplus, it's very large. So that suggests that there is scope for Europe to be able to handle a stronger euro as well. So my sense is I think there's further to go in this euro appreciation. I think this is probably the middle stages of this broader multi-year uptrend in the euro and downtrend in the dollar.
Which is not great, really, for European stocks, obviously, if the currency continues to rally. What about Japan, Bilal? We saw some calls a few days ago for possibly the yen to strengthen to 100 to the dollar after the resignation of Shinzo Abe. Now we're seeing calls for his successor to be even bolder than he was. What do you think about what is traditionally a safe haven currency continuing to gain as the dollar weakens?
Yes, I mean, the Japan always, has this challenge that it is the safe haven currency, partly because it's had protracted low interest rates for a long, long time, so it becomes a funding currency for all risk-on trades, and partly because Japanese investors are large investors abroad as well. So Japan always catches the brunt of having to strengthen when the dollar is either very weak or when you have risk aversion. I do think that, the Abe period did see obviously pronounced yen weakness. Now, part of that was because of the time Abe came into power, the yen was very strong at the time, and he did FX intervention. Today, the possibility of doing FX intervention is very low, so any new prime minister will not be able to intervene in FX markets, which basically means that the yen could strengthen further. And of course, if we do see the euro moving up towards 125 or higher, then that necessarily means that dollar yen should move towards 100, if not lower as well. And, what can the Japanese do in that environment? Really not much. There is scope for some of the government pension funds to allocate more abroad, which could try to weaken the yen, but that really only affects the currency in the very short term.
Let me ask you about, Bilal, about the geopolitics that might drive some of these currencies and the pure politics, I suppose. We've seen this note from one bank, at least, JP Morgan, suggesting that investors should be increasingly mindful of the betting odds around President Trump, and they're suggesting that he's seeing a resurgence in at least the betting odds in favor of him taking on a second term. How are you positioning ahead of November's election, then?
Yeah, I mean, I think, a few months ago, there was a very strong and clear Biden lead ahead of Trump. Since then, the polls have started to move somewhat against Biden. I mean, he still has a lead, and more worryingly for Biden, at least, the battleground states, his lead there has narrowed a bit. If we go back to the Clinton, the 2016 election, you also saw a similar large lead. So everyone is now getting worried that, the polls were wrong. Prediction markets certainly are starting to narrow very, very sharply. My sense overall is that this will naturally be a fairly sort of close election, but overall, my sense is that Biden probably still has the odds over Trump. The larger issue here, though, is if we do have a contested election. So if Biden was to scrape by with a very small victory, will Trump contest that election? And then we have 2-3 months of uncertainty, which would be very negative for markets as a whole. So the thing I'm focusing on at the moment is more about the margin of victory for either side and whether that will lead to a contested election.
Yeah, really interesting piece by Cass Sunstein on the Bloomberg about that, the potential for a contested election. What is the process if we end up in that situation of getting us out of it? Bilal, thanks very much. Bilal Hafeez, Macro Hive CEO and founder. He stays with us on the program. We'll get more thoughts from Bilal on tech next. Coming up, taking a big bite out of the market, Apple plans a massive rollout of its next generation iPhones with 4 new models to be presented in October. We talk tech next. This is Bloomberg.
welcome back to Bloomberg Markets. This is the European Open right now, 10 minutes into the session, and we're seeing the FTSE, which opened momentarily higher, down now 0.75%. The DAX down about up about 0.5% right now. So we're seeing gains in European equity indexes as the FTSE falls in London. Let's get the Bloomberg Business Flash. For that, we go to Laura Wright. Laura?
Thanks, Matt. AstraZeneca has begun large-scale human trials of its coronavirus vaccine in the US. It plans to enroll as many as 30,000 adults to test the shot. A final stage test is also underway in the UK and could yield preliminary results as soon as next month. The vaccine was developed by researchers at the University of Oxford. In South Korea, prosecutors have indicted the de facto leader of Samsung, J.Y. Lee, on charges including stock manipulation. It could potentially put the head of the world's largest electronics company on trial for years. The indictment is related to whether Lee and Samsung used illegal means to help him take control of the firm founded by his grandfather. Elon Musk is now the third richest person in the world, passing Facebook's Mark Zuckerberg. He was helped as Tesla shares continued their rally after a stock split. According to the Bloomberg Billionaires Index, Musk is now worth over $115 billion. His net worth has grown nearly $90 billion this year alone. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thank you very much. Laura Wright in London with the Business Flash News. Let's stick with one corporate news story that we've been following here at Bloomberg from the tech sector. Apple is planning a massive rollout of its next generation iPhones, asking suppliers to build at least 75 million units. The tech giant's also expected to unveil 4 new models in October with 5G wireless speeds, a different design and a wider choice of screen sizes. Let's broaden the conversation, though, not just Apple, but the tech sector as a whole. Bilal Hafiz, MacroHive CEO and founder, is still with us. And Bilal, you've had many roles over the years and clearly leaning more towards the macro. But in terms of the trend towards tech and what seems to be relentless rally we're seeing in tech stocks, this has not passed anybody's notice, I'm sure. What do you make of where we are at the moment on tech stocks? One house I was reading this morning says they're not expensive, looking back at past valuations. What are your thoughts?
Well, I think on the valuation side, I think valuations haven't really been a good indicator for stocks over the past year or in recent months at all. So I think I'd put a smaller weight on relying on valuation as an indicator. At the very sort of basic level, from a narrative perspective, I think one thing the pandemic has shown clearly is that many technological trends have been accelerated. So lots of things we thought would be adopted in 5-10 years are being adopted today. So in that sense, it makes a lot of sense for technology stocks to do incredibly well. In some ways, what the pandemic has done is it's accelerated the digital economy. So anything in the digital space has continued to thrive while things in the physical world haven't. So I think that's one big support for tech. Another is that unlike the dot-com period, the cash flows of these tech companies, especially the larger ones, are very, very attractive. And so in some ways, they have some defensive characteristics. So they have the characteristics of a utility company in the sense that very stable revenue, but unlike utility companies, they have incredibly high profit margins as well. So in that sense, I think there is some justification or at least a narrative to justify these moves in tech. Now, there are some stocks like Tesla, which don't quite fit this narrative. And I think the Tesla story, I think, is more to do with the fact that there are large shorts in Tesla, but also there's a whole ESG energy story as well, which I think is benefiting Tesla as well.
Well, I was just thinking yesterday, Bilal, when I went into my garage, I moved into a new building that was put up only 5 years ago, 2 floors of garage parking spaces, and they only have 2 charging stations. Over the last, let's say, 6 months to a year, it looks like 10 people have gotten new electric cars. So I think you're spot on about what we thought was going to take 5 to 10 years to happen, certainly in electric cars, is happening already. We see that reflected in the numbers as well, and that's part of what's going on at Tesla. But with respect to valuations, I have to ask, if you can't look at valuations, how else can you judge whether or not you want to buy a stock at today's price? I mean, or any asset at today's price. You've got to be able to value it somehow, haven't you?
Yeah, I mean, I think there's a couple of different ways you can look at this. That, you know, if you do want to go down a valuation approach, I think you have to, you know, put that into the context of what other assets are yielding as well. So the fact that, you know, long-dated bonds are offering you meager returns, if not negative yields, that makes equities much more attractive then. So you have to kind of look at the Fed valuation model, which is to compare earnings yields to bond yields. You can't really ignore that. So that's one thing. Another thing would be to look at market flows. You can look at trends in earnings, as in, like, you know, are earning momentum picking up or not, you know, regulatory change, tax changes. So there are a whole array of other things you can look at to determine, you know, whether it's wise to buy some of these tech stocks. Interestingly, my own view is I think one of the biggest risks to tech stocks is actually if we do get a vaccine breakthrough, because then suddenly all these, you know, more traditional companies will suddenly look much more attractive. So I think part of the reason everyone's piling into tech is that with a world where we aren't sure about what's going on with the pandemic, the only thing you can do is pile into digital companies. Whereas if we get a vaccine and the world normalizes, then suddenly the rest of the universe of companies look much more attractive. So you could see a shift of flows from one to the other.
Yeah, Bilal, that's really interesting. And I've tried to get this out of a number of guests recently. You said suddenly things change and suddenly things look different. Is it going to be sudden? Will it just be one red headline across the Bloomberg that says X company has developed a vaccine that is successful to somebody's standard in terms of treating coronavirus, and then all of a sudden we're back to where we were February of this year? How will this work in terms of the market's thinking?
Well, I mean, normally markets obviously tend to anticipate these sorts of things, so it's never quite the headline. But I think it could be something like that. You know, if we look at surveys we've had of our investor base at Macro Hive, we find that most people are expecting some kind of vaccine breakthrough in the first half of next year. Now, if, you know, as you pointed out in your news stories over the past hour, if we do get a breakthrough this year, that certainly would be a big surprise for markets, and you could start to see things start to price the other way. There would still be some questions around, you know, the viability of the vaccine. Can it be used on everybody? Would it just be used on high-risk people? You know, is there enough vaccines? Will there be a fight between countries to access the vaccine? So there are kind of other questions that arise. But I do think, you know, the first kind of Western company that has a FDA approval, for example, of the vaccine, that would lead to a big shift in market prices.
All right, Bilal, really fascinating stuff from you, and we're going to get more from the CEO and founder of Macro Hive. Bilal Hafeez is going to join us on Bloomberg Radio in just about 40 minutes time. So at 9 a.m. in the UK, you can tune in London. If you're in London, on DAB digital radio. Anywhere else in the world, you can obviously just just Google Bloomberg Radio, or on the Bloomberg, you can get radio live as well. Coming up, it's a growth boom for Zoom. The video meeting company soars after revenue jumped more than 4 times in the second quarter. We'll discuss that next. This is Bloomberg.
Morning everybody. New order placed for Japanese yen at 105.705. It's long. I'm buying Japanese yen at 105.705. long position open on Japanese yen at 105.705.
Welcome back to the European market open. 8:21 here in London, 9:21 in Paris or Berlin. European equity markets in positive territory then, apart from the FTSE 100, which is really playing yesterday's game because we were closed here, of course, in London for the bank holiday. Let's talk about tech. And Zoom's second quarter revenue jumped more than 4 times from a year earlier. The company stands out as one of the main beneficiaries of the pandemic as consumers flocked to the video meeting service. Zoom sales projections signal the explosive growth may continue. Joining us now with the details is Bloomberg's Danny Berger. Danny, does Zoom's booming growth then, does this, I mean, it comes as no surprise, does it?
It really doesn't. We knew that Zoom would have a great quarter considering the working at home shift and had an explosive first quarter. But I think one of the pieces that is surprising is the extent to which we saw this explosion in revenue. So the estimate were about $500 million, but it comes in at $663 million. Now that means we saw an increase of 4 times year over year for the company. And what's really impressive here is that the company says that this growth has no signs of abating. They think that there's going to continue to be more adoption and more sales of their video services. Now, I think one analyst from D.A. Davidson, Rishi Julari, put it really well when he said, I'm at a loss for words. After the first quarter, he said that he and his colleagues had discussed the company's earnings, saying, okay, this is one of the best results we've seen in the software space. How can it get better than this? How do they follow it up? Well, he says, I think they've done it. If you look at the entirety of the NASDAQ 100, this is the second biggest sales increase we've seen this quarter.
And of course, even if it is no surprise, the CEO is a much richer man today than he was last year. Talk to us about Eric Yuan's wealth.
Yeah, Matt, after hours trading, when we saw shares of Zoom go to $410, that meant that the CEO of Zoom's wealth in just 4 hours increased by over $4 billion. He's already seen his wealth really explode this year. That chart makes it abundantly clear. That's $12.8 billion he's added this year before yesterday's close. His net worth, no surprise here, considering that looks probably a lot like Zoom's price chart, is made up mostly of 50 million shares of Zoom that he owns. Look, it's been a big year for some eye-popping moves in people's net wealth, be it Elon Musk, be it Jeff Bezos. We'll add Eric Yuan to that list as well. If the stock holds up its aftermarket gains, it means that his fortune will surpass $20 billion today. Matt, Anna?
Yeah, and Danny, you were flagging to me earlier how it seems broader than just Zoom, back to the sort of big picture moves around technology, how there are a number of brokers lining up to be positive about tech this morning.
Yeah, it's really true, and it's remarkable when we see this because often when you see tech at highs, that's when we get the contrarian analysts coming out and say, okay, it's too high, take a step back. But for example, Wells Fargo this morning saying, look, if you take it through a price to earnings ratio or a price to cash flow ratio, tech actually doesn't look overvalued. It doesn't look like it did in the tech bubble. So by that measure, we should still be buying tech. Bernstein, another shop which I should say loves to take the contrarian side, said that now is the time to be going long U.S. growth. Their argument is twofold. One of them being that rates are very low right now, so that's why tech will continue to look better. Their cash flow will look better throughout the future without that inflation discounting their cash. What's more, this is really the only sector that's still issuing buybacks. In the U.S., corporates are now net issuers of stock. Buybacks are really evaporating as companies are trying to shore up their balance sheets. But U.S. growth, a lot of these tech names still issuing buybacks, which makes them an attractive buy, according to Bernstein.
All right, Danny, thanks very much. Bloomberg's Danny Berger talking to us about Zoom and tech stocks there. We've got a couple to look at in the movers as well. As Zalando, for example, is one rising higher today, raised to a buy at Goldman Sachs. This stock has gone from 45 to 75 this year, so not a bad year. You see Dialog Semiconductor there as well. Apple, you know, the story we've been telling you about all morning, targeting 75 to 80 million 5G iPhones this year. That's helping suppliers. Obviously, Dialog is one of those, and that's also a stock that's rising today. Although a stock that's fallen this year. You know, Dialog started the year off at about 45 and is now trading at 37. So it's got a little bit of catch up to do. Old Mutual is scrapping dividends as profit drops, and as a result, you see Old Mutual down 7%, not a tech stock. Coming up, we'll talk more about Apple as well as Tesla climbing to record highs after stock splits. Will the effect last? This is Bloomberg.
I'm placing a stop and profit for Japanese yen at 105.25. Sorry, 7.25. 105, 7.25. Okay, it's placed.
Welcome back to Bloomberg Markets. This is the European Open, 30 minutes into the trading session right now, and we're looking at gains on European equity indexes, although the FTSE has fallen. So the broader stocks, Europe 600, is up 0.7% right now. And if you take a look at the group ranked returns screen, GRR Go, you can see the indexes that are helping to lift European stocks. Technology is a big winner. Healthcare, as well as automakers, are all up. The only losers, really, travel and leisure stocks, banks as well as media. And if you look a little bit deeper into what's pulling down, what's weighing down the FTSE, you'll see you have drops in Old Mutual, which we showed you earlier, but also Trainline PLC, Rolls-Royce, British stocks basically that are helping to take points off of the index, as well as the bigger HSBC, Lloyds, BP, Vodafone, etc. Let's get the Bloomberg First Word news right now. These are the top stories from the Bloomberg terminal. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. President Donald Trump is planning to visit Kenosha, Wisconsin, the city where 2 protesters were killed last week. Speaking yesterday, he suggested the man arrested over the shootings may have acted in self-defense. Presidential rival Joe Biden slammed the president for not calling out the teenager Kyle Rittenhouse, who's been charged with homicide. Investors should position for the rising odds of President Trump winning re-election. That's the take of JP Morgan. It says betting markets for the November poll are now nearly even, and the Wall Street lender says that's largely due to the impact of recent violence on public opinion and potentially also bias in the polls. Germany doesn't expect the economic fallout of coronavirus to be as bad as previously thought this year. Sources told Bloomberg of the updated forecast set to be officially released today. Activity in Europe's biggest economy has staged a rebound after collapsing in the second quarter. Global trade is on course to recover more quickly than after the 2008 financial crisis. That's according to Germany's Kiel Institute for the World Economy. It says shipping volumes are already back at levels that took more than a year to reach following the collapse of Lehman Brothers. The institute says that hints at a V-shaped recovery. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Thanks very much, Laura
Wright
here in London. Let's turn once again to tech. That's where, Matt, a lot of the headlines are, of course. Apple and Tesla climbed to record highs on Wall Street as their stock splits took effect, while we've just learned that Apple has asked suppliers to build at least 75 million 5G iPhones for later this year. Joining us now is Bloomberg's tech opinion columnist Alex Webb. Plenty for you to pore over then this morning, Alex. Many themes in tech. Let's start with Apple, shall we? 75 million 5G iPhones. What exactly does that mean for a company the size of Apple? What is that telling us?
I think it's confirming the sort of expectations from earlier in the year that the virus wasn't necessarily going to be eliminating demand for its handsets, but it might push it back a little bit, and it seems to be pushing it back into the latter end of the year. The numbers that our colleagues Debbie Wu and Mark Gurman have reported as the sort of production target, they are the same as last year, essentially, which, it is broadly the trend at Apple these days. They don't necessarily sell more handsets, but they manage to wring more dollars out of the handsets they do sell. And these handsets will be 5G enabled. Irrespective of whether you think 5G is actually going to make a meaningful difference to anyone's life, it will, one expects, mean they can charge something of a premium and costs above the thousands they have been charging as a base price for the highest end phones of late.
Hopefully it makes everything better, Alex, although there are, of course, these broad conspiracy theories. They existed. I mean, when television first came out, when microwaves came out, each generation of cell phones, there's been a group of people that have been worried. I think power lines concerns people at one point as well. But they seem to be getting louder around 5G. Is that going to be any kind of detriment to the rollout of the network?
No, I mean, look, it's all nonsense. Like as you say, it's the conspiracy theories that can be fueled by any number of social media sites. I think there is a sort of NIMBYism which it might make it harder to install some of the antenna. There's going to be a greater density of antenna than there are currently with 4G. I think the greater concern, and this is a real concern, is the power consumption in 5G networks. You've got more antenna, they're serving more phones. There's a concern that power consumption is going to go to the roof, and that is something which, given the legitimate concerns about the environment, that is something that we need to be thinking about and talking about. Now, the companies who make the networks, the likes of Huawei, Nokia, and Ericsson, they are working on solutions to make their networks more efficient. But even with more efficient networks, you're having more of these antennas. So that is a legitimate concern going forward.
And let me ask you about other things in the tech space then, Alex. We've got, of course, Tesla very much in the news and Elon Musk very much in the news. Now the third richest person in the world. Just pause there to let that sink in for just a moment. The third richest person in the world. A stock split certainly works for some.
Yes, he's a very, very rich man on paper. Look, I mean, it's so hard to get your head around this tear of valuation that Tesla is on. At this stage, all the shorts are starting to look a little bit, must be a little bit concerned, given that they've been saying when it was at a far lower valuation that Tesla wasn't worth the money at which it was valued. Now, it increasingly looks as though there's a sort of, eagerness to get on board this train, to mix a metaphor, but the lack of other investments in this, sustainable transportation space is perhaps a very good reason for the fact that, Tesla is now worth more than sort of every other car company in the world put together. And Elon is clearly benefiting from that.
All right, Alex, thanks so much for joining us. Love having you on. Bloomberg Opinion columnist Alex Webb. You can check out his work by typing OPIN-GO or see the rest of the Bloomberg Opinion columnist. Up next, the question of whether or not there will be 4 more years for President Donald Trump. JP Morgan says investors should position for rising odds of that as the president visits Kenosha, Wisconsin today. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 40 minutes into the session and looking at strong gains in Europe. The DAX up 167 points to 13,115. The FTSE, on the other hand, in London down about 0.2% as some of the biggest banks and oil companies fall there. Let's talk about the U.S., though. JP Morgan says investors should position for the rising chance of President Donald Trump winning a re-election. Betting odds that had him well behind his Democratic opponent, Joe Biden, are now nearly even. JP Morgan says that's largely due to public opinion of the violence around protests, as well as potential bias in polls. For more, Bloomberg's Joanna Ossinger joins us. And, you know, Joanna, this is something that our columnist, John Authors, highlighted yesterday morning as well in his piece on the Bloomberg. Now, Marko Kolanovic, who has a fantastic record, is chiming in as well, right?
Right, and Marko has been looking at polls, at research, and he's saying that history shows that the protests are worse for Democrats, and you do have biases in polls that make Biden look like he's doing better than he actually is. And also, the COVID data are improving. So even if a lot of people might feel like the Trump administration hasn't necessarily handled that well, if it's starting to improve and go a bit into the rearview mirror, that might be beneficial for Trump heading into the election.
And so that's some of the things that are sort of lie behind this conclusion then, Joanna, about taking Trump and the potential for re-election more seriously. Still a lot could happen. I suppose that's also worth pointing out. Still a lot could happen between now and November.
Yes, and they do mention there are all sorts of things, including debates, including if we have another wave of COVID, if the protests resolve differently. But even with the protests, the Democrats are caught a little bit between trying to appeal toward broader America and try to tamp down the protests versus, say, their progressive wing, who might be more pro-protest. So it is a bit of a tough line for the Democrats. But yes, there is so much that could happen in the next 60-plus days.
Difficult for the Democrats, but on the other hand, you know, if they think they're 10 or 15 points ahead, a lot of times people just aren't motivated to come out and vote. Maybe this is, in an odd way, kind of better for the Biden camp.
Right, and that was one of the things that happened with Hillary Clinton, is there were complaints that she didn't necessarily visit places. This might be lighting a fire under the Biden people a little bit to get out there more, to kind of run like they are behind, even if they don't necessarily think they are. So yes, you're exactly right that if you're running like you're ahead, that doesn't necessarily help either.
We'll see how President Trump's visit on the ground goes today then. Thanks very much for the update, Bloomberg's Joanna Ossinger joining us there with the latest on politics meets markets. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. In South Korea, prosecutors have indicted the de facto leader of Samsung, J.Y. Lee, on charges including stock manipulation. It could potentially put the head of the world's largest electronics company on trial for years. The indictment is related to whether Lee and Samsung used illegal means to help him take control of the firm founded by his grandfather. The glitches yesterday on Robinhood and other online brokers, they've been resolved. Robinhood saw problems related to equities, options, and cryptocurrency trading, but said yesterday afternoon that the issues had been fixed. Problems also hit TD Ameritrade, Vanguard, and Charles Schwab. Elon Musk is now the third richest person in the world, passing Facebook's Mark Zuckerberg. He was helped as Tesla shares continued their rally after a stock split. According to the Bloomberg Billionaires Index, Musk is now worth over $115 billion. His net worth has grown nearly $90 billion this year alone. That's your Bloomberg Business Flash. Matt, Anna.
All right, Laura, thanks very much for that. Laura right there in London with your Business Flash. Now, the Hong Kong Exchange has kicked off its flagship biotech summit. The virtual event comes at a time when healthcare-related listings in Hong Kong have surged to a record amid the COVID pandemic. Earlier, we spoke to the Hong Kong Exchange's and clearing chief executive Charles Lee.
This is just the right thing to do at the right time. And it's such a big sector, and China is such a big country with very massive aging population, huge healthcare challenges, and lagging drug development. So all of this require Asia to have a center for biotechs so that we can support research, we can support the massive healthcare reforms. that China finally kick off. I think that's a very big event because China finally, just literally 4 years ago, brought the entire drug administration system into exactly the same, almost as FDA. In fact, they call themselves a CFDA. That reform essentially bring China's standard of governing drug administration, pretty much the same with the U.S. So that reform set the foundation for us to be able to, again, take a huge reform in the biotech sector in terms of listings, because they have no revenue, obviously, before they can even sell anything. They need to have a government approval, but they were really heavily regulated. So we thought that previous history of being able to be regulated allowed them to be listed, despite the fact that they do not have the traditional financials that typical companies that we ask for before they can list here. So it was a great event. It's a milestone. We never thought COVID-19 is going to hit us, but now looking back, I don't know how we could cope without this new sector that is allowing so many companies just to join the race, finding a vaccine, finding therapeutics, and finding solutions.
So what's the edge for Hong Kong then? Because we know that China has domestically also been deregulating to make it easier for some of these particularly unicorn companies to list domestically on the Starboard, or making it easier for them to list on the Chinex as well. So what's the differentiating factor for going to Hong Kong?
Well, we have always, for the last, 7 out of the last 11 years, the 7-11, we are number one in terms of IPO. So there is just, we are the IPO center around the globe. And so, that's just the tradition. And also a drug development, in this space is very international, and requiring tremendous amount of scientific collaboration between the US, China, and Europe. And the scientists are really all over the place. They're writing, they're publishing. So there need to be a very significant international component to it. So Hong Kong provide that great international connectivity. And our rules, obviously, before couldn't really handle this. So we had gone through a massive reform and really allow all pre-revenue, but second phase clinical trial.
Well, we close position on Japanese yen at 105.725.
Together. So I think we provide that unique combination.
But HKX is not done yet, right? What more will you see in terms of reform, and what sort of tweaking in the rules could we see as you try to attract more listings?
Well, I think in the broader reform, because Chapter 18A, which is the pre-revenue biotech chapter, is a part of a very large comprehensive reform of really changing the landscape and changing the composition of our market. So a lot of reforms have to do with WVR, VIE, and many of the U.S. companies have certain unique corporate governance structures that do not necessarily fit in here. So we need to find a way to see whether we can make it work for them eventually to all come back. But for specific biotech 18A, I think the bulk of what we needed to do is pretty much behind us, done. But there are a lot of tweaks here and there, and just to make the offering a little bit more, easier. And so there are a few things that we're working with our regulators, our listing department colleagues, but we're not talking about fundamental change.
That was the Hong Kong Exchanges and Clearing Chief Executive Charles Lee speaking to Bloomberg's Heidi Stroud-Watts and Sherry Ahn. Just to tell you, we're getting some numbers coming through on manufacturing PMIs for Europe. The Italian number rising to 53.1, ahead of an estimate of 52. Stocks start September mixed after tech pushes the Nasdaq to another record. How long will that last? We'll talk about that with the Markets Live team. We'll also throw in some of this breaking news on manufacturing PMI, the French number just breaking 49.8. This is Bloomberg. Welcome back to the European Market Open. We're 53 minutes into a trading session that has European stocks flying pretty high, up 0.75%, the FTSE 100. Let's just put that to one side, shall we? Playing catch up with yesterday, essentially, and so we see losses there down just 1/8%. Christine Aquino, who leads our Markets Live team here in Europe, is with us. And Christine, we're all about tech, it would seem. We've talked a lot about tech, though, so I'm going to put that aside for just 1 second and talk instead about what's going on with the euro. We see real strength coming through here. Is this something that worries, do you think, European companies, the European Central Bank? 119.90 is where we trade, up around 0.5%.
Yeah, absolutely, Anna. I mean, it's probably not worrying at these particular levels just yet. Our stocks team did a survey last week on what would be the pain threshold for most companies, and they found that it was around 130. So we're a good big figure away from that. And looking at the ECB perspective, it hasn't pulled away all that much from the European or the euro effective exchange rate, which the ECB uses as a better benchmark rather than the euro-dollar rate. But it is certainly bringing up these questions of when the currency will start becoming a problem for companies and the economy as well. It's not particularly convenient time for a currency to be strengthening when we're still feeling the after effects of the coronavirus crisis, and we'll probably be feeling that for years to come.
We're seeing, I mean, because of the dollar weakness, we're seeing a lot of pretty crazy numbers. A pound at 134.35 right now, and the chart just does a hockey stick in the last few minutes. The same is true with the euro, 119.89. So the weaker dollar really moving markets. Right now, we're also seeing German August unemployment, which is down by 9,000. The median estimate was for a 2,000 drop. We're getting some German data points out. Maybe most importantly is the manufacturing PMIs that slightly miss. 52.2 is the level. The survey is for 53. But we're going to get, we're expecting to get, because of a Bloomberg scoop, Christine, a new estimate for the German economic growth expectations out of the finance ministry. Does the rebound here look stronger than anywhere else?
Yeah, it certainly does that. And it does look like it has more momentum than, say, the U.S., for instance. But still, some of the details that we're seeing, for instance, in the PMI numbers, would be worth paying attention to. Again, I would draw your attention to the employment components of the PMI releases, because that really is probably likely to be the pain point of the economy. I mean, we are seeing, as you mentioned, unemployment beating estimates here, in that it is falling more than expected in Germany. But what about the other countries in Europe who probably don't have as much capacity for job support at the moment?
Christine, thanks very much. Yeah, there's a lot of interesting lessons to be learned of all sorts, really, from the scheme around furloughs in Germany. Christine Aquino, who leads our Markets Live team, thank you very much. We'll keep an eye on what's going on with euro-dollar, 119.93. Will it be up at 120 shortly? It's certainly been moving around on a lot of that data. We just received gold, also in focus, around the $2,000 mark. Surveillance is next. This is Bloomberg.
4 more years, JP Morgan says investors should position for rising odds of Donald Trump being reelected. The president visits Kenosha, Wisconsin today. Better than feared, the German government expects this year's contraction to be less severe than previously forecast. Well, Peter Altmaier speaks this morning. And Apple's production blitz, the tech giant asks suppliers to build at least 75 million 5G iPhones for later this year, in a sign that demand is holding up. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, onto your markets, but also onto a bit of data that we had earlier on in terms of PMI. So first of all, this is what we're looking at in the markets. Now, the euro area data, which the markets may look at, is August manufacturing PMI, 51.7. That's pretty much in line with the expectations, because economists we had spoken to were also expecting a 51.7 figure. Now, the dollar dropping to a 2-year low. European stocks, U.S. futures also climbing after we had some Chinese manufacturing data that indicated that exports seem to be underpinning a recovery, and then euro leading the charge against the dollar. Treasuries, little change. Then I want to show you copper. The weaker dollar really fueled a broad advance in commodities, with copper climbing past $6,800 a ton in London. Now let's get straight to the Bloomberg First Word News. Here in London is Laura Wright. Hi, Laura.
Thanks, Francine. Germany doesn't expect the economic fallout of the coronavirus to be as bad as previously thought this year. Sources told Bloomberg of the updated forecast set to be officially released today. Activity in Europe's biggest economy has staged a rebound after collapsing in the second quarter. Global trade is on course to recover more quickly than after the 2008 financial crisis. That's according to Germany's Kiel Institute for the World Economy. It says shipping volumes are already back at levels that took more than a year to reach following the collapse of Lehman Brothers. The institute says that hints at a V-shaped recovery. Argentina has received widespread bondholder support to restructure its overseas debt. It paves the way for the nation to emerge from the 9th default in its history. Investors holding almost all of the country's international bonds will swap their securities for new notes. Argentina says this support will generate about $38 billion of debt relief over the next decade. Elon Musk is now the 3rd richest person in the world, passing Facebook's Mark Zuckerberg. He was helped as Tesla shares continued their rally after a stock split. According to the Bloomberg Billionaires Index, Musk is now worth over $115 billion. His net worth has grown nearly $90 billion this year alone. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thanks so much, Laura. Now, President Donald Trump is planning to visit Kenosha, Wisconsin, the city where 2 protesters were killed last week. Speaking yesterday, he suggested the man arrested over the shootings may have acted in self-defense. While presidential rival Joe Biden slammed the president for not calling out the teenager, Kyle Rittenhouse, who's been charged with homicide. Take a listen to the president and his opponent, Joe Biden, speaking on this issue yesterday.
We have to stop this horrible left-wing ideology that seems to be permeating our country. And basically it's weakness. It's weakness on behalf of Democrat politicians or Republicans. We don't have problems.
Do I look like a radical socialist with a soft spot for rioters? Really? I want a safe America.
Are you going to condemn the actions of vigilantes like Kyle Rittenhouse.
We're looking at all of it. That was an interesting situation. You saw the same tape as I saw, and he was trying to get away from them, I guess, it looks like, and he fell, and then they very violently attacked him, and it was something that we're looking at right now. And
He may believe mouthing the words law and order makes him strong, but his failure to call on his own supporters to stop acting as an armed militia in this country shows how weak he is.
Well, for more on all of this, Bloomberg senior editor Derek Wellbank joins us with the very latest. So first of all, Derek, good morning to you, or good afternoon. What are we expecting from Trump's Kenosha visit today?
I think you're going to see Donald Trump do more of the same and at volume. Donald Trump has been very, very clear that he is going to run as a law and order candidate. He is going to talk about law and order every single chance he gets. He is going to hug policemen as close as humanly possible as he executes his campaign. This is a president who has seen any number of difficulties over the past year, but thinks that on this he might have a winning issue that can help his campaign, which is currently trailing in national polls. Now, Wisconsin is, for those not familiar with the American electoral map, arguably the most important swing state this year, and President Trump will travel to Kenosha very much against the wishes of the city's Democratic mayor and the state's Democratic governor, where he plans to go in there. And as he has said, he's going to go praise law enforcement. He's going to go praise the National Guard. And that is the rock on which he stands.
Derek, are we seeing any shift in the polls or in public opinion due to the unrest?
We're going to get a lot of polls out this week, Francine, that I would imagine will get a lot of coverage. Initially, so far, both candidates look like they came out of their conventions relatively flat to where they went into them, which means that Biden has a durable national lead that's slightly larger than Biden's lead in most swing states. Now, there are 2 months and change until the November election. A lot can happen in that period of time, as we all remember from 4 years ago when Hillary Clinton led at this period of time. So we can pump the brakes on inaugurating Joe Biden right now. There's a lot of room to go. And as I say, on this is an issue where Donald Trump feels like he's got a bit of an advantage. Now, Biden has said flatly that Trump needs to do more to rein in his own supporters, and has accused the president flatly of inciting violence. And not being willing to condemn some of his supporters who are out there, in the same way as Trump is saying that Biden needs to be more forceful against some left-wing protesters who are out in the streets.
Derek, I want to show you a great chart that Hillary Clark did for us on the back of JP Morgan, saying for markets to prepare for a rising chance that President Trump wins a second term. And these are the chances. So you actually see the blue line being Joe Biden, and you can see actually, the white line is Joe Biden. You can see the popularity going down and Donald Trump actually slowly rising. I mean, what are the chances that President Trump turns us around and gets a second term?
Well, Nate Silver has Joe Biden at about a 2-to-1 chance right now. I am, Francine, this is just me. I am exceptionally skeptical of betting markets. Betting markets in the Democratic primary had Hillary Clinton with a better chance to be the nominee than people who are actually running, which says to me that as much smart money as there may be in there, there's a whole lot of dumb money in there as well. So I take that with maybe not a grain of salt, but an ounce or a pound of salt. But what I do pay attention to is state-level polls, and what I would encourage people to pay attention to over the next 2 months is these state-level polls, because this is not a national contest. It's not some national referendum. It is a coalition of 51 different contests in 50 states in the District of Columbia, where you need to get math to add up to 270 electoral votes. And 2 of the biggest places where this election is going to be fought are in Wisconsin, where it's the current center of the unrest, and in next door Minnesota, which is where George Floyd was killed, in May that sparked all of this. Those are going to be two really important states, and the president is targeting them very hard, so watch out for those.
Thank you so much, Derek Wellbank, there, a Bloomberg senior editor. Now, joining us this morning, we're delighted to have Ludovic Subran. He's chief economist at Allianz. Ludovic, thank you so much for joining us. When you look at that warning by JP Morgan and others, what exactly is priced in markets right now? Is it Joe Biden president, or is it, a second-term Trump that's priced in?
Well, I think markets price Joe Biden. The problem is that they don't price the mayhem post-election and what could be the little shutdown recession after the great lockdown depression. I'm a bit concerned about what could happen in the 3 months between the elections and the actual taking power of the new president of the United States, be it, President Trump or Joe Biden. So that's for us the biggest concerns for the fourth quarter, which is massively underestimated on this side of the pond, where you see most of the governments now, updating their forecast based on quite a good summer, but they don't see that the international environment is actually getting worse and worse by the minute.
What's your take on, dollar has now fallen to a 2-year low, Ludovic. Will it just continue falling because of the slight changes from the Fed in targeting inflation?
Well, it's very interesting because the differential between the euro and the dollar cannot be explained by rational factors. The growth differential is not enough. Maybe indeed the Fed is much more dovish than the ECB. The board member Schnabel yesterday said we won't do more right now, whereas, as you know, Chairman Powell did a lot last week. But I think what is really priced in is a sort of trust in what could be the US in the next 6 months from now. So the big question is indeed whether there is a big bet on the credibility of economic policy in the United States, and can the United States get out of this twilight zone faster than the Eurozone? And for me, the depreciation of the dollar is a big puzzle, but it's also a big concern because it creates all type of secondary effects. For example, the record low valuation of Euro stocks compared to American stocks, or the idea that the US economy right now is fueled on something that is eerie at best, which is a record low dollar compared to fundamentals of the US economy. So we expect the dollar to appreciate again after the election. We don't think this is something secular that is happening, but clearly it will have a toll on capital flows between the US and Europe for the next 3 to 6 months.
Ludovic, thanks so much. We'll get back to Ludovic Subran, their chief economist at Allianz, and we'll talk a lot more about the US, but also Europe. Coming up, better than feared. The German government expects this year's contraction to be less severe than previously forecast. We'll talk Europe next. This is Bloomberg.
I'm placing a new order to buy euro at 119.842. Sorry. Order placed to buy euro at 119,842.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's talk about Europe and let's talk about Germany, expecting the economic fallout from COVID-19 that will be smaller than it earlier projected. Sources told Bloomberg of the updated forecast, and the economy minister, Peter Altmaier, is due to present the new outlook at 10 a.m. UK time. Activity in Europe's biggest economy has staged a strong rebound after collapsing in the second quarter during the coronavirus lockdown. Well, still with us is Ludovic Subran from Allianz. Ludovic, I guess it's extremely difficult not knowing if there's a second lockdown, what that second lockdown would look like, to have a path forward for Germany. But does euro strengthen from here because the situation will get better?
You know, I think the situation of the manufacturing sector is definitely getting better. We saw very good numbers from the beginning of the summer on. I'm much more concerned on the consumer side because the consumer was the first one to pick up. There was a real V-shaped recovery, but now there is a plateau at 80% of consumption. So I think it's a bit, optimistic from the German government to update yet again the forecast. But it shows that they are confident that the policy, the 4% stimulus that they put, so 4% of GDP stimulus they put in the economy is working, especially the temporary VAT reduction. They're also confident, I think, that the stocks that companies have and the fact that bankruptcies have been postponed will not disrupt the ability of Germans to export. But on the consumption side, I'm still very worried about the saving patterns. We see a lot of precautionary savings in Germany. And this is something that is not good because it means that people are restraining themselves from consuming what matters really for a country like Germany, which are services.
So what happens to Germany longer term? Does it outperform a country like France or Italy, or are there doubts about also, political doubts that could put in question the economy?
Well, short term, yeah, Germany is the one that is getting out of the crisis the strongest. Potential growth-wise, Germany entered the COVID-19 recession with a very low growth rate, remember, because of low productivity, but also because of the export-driven sector that was actually a bit under duress. When you look at the stimulus program that Germany took, there is nothing about the long term. There is very little actually about the long term, which is, an investment program for the greening of the economy. But this is very small compared, for example, to what France is doing or what the US is doing. So for the long term or the potential GDP. So I wouldn't be surprised that by the end of 2021, when Germany actually recovers from this crisis faster than the other, the question of very low growth that Germany will be locked in continues to haunt most of the German pundits and the German governments, because this is going to be right after the elections in Germany, and we need a new model in Germany when it comes to simplification and structural reforms, when it comes to basically making export dependency a bit less, but also when it comes to being stronger on innovation and moving up the supply chain. And there is nothing on this when you look at the recovery plan announced by the government last month.
Ludovic, we may also come back to Brexit afterwards, but if there's a messier Brexit or WTO rules, who has the most to lose in Europe?
From Brexit, Ireland first, of course, the Netherlands second, and then the exporting countries. So basically, Germany, Italy, and to a lesser extent, Spain. The big issue with Brexit right now is, the negotiation are doing very.
I will move down a little bit for order to buy at 119,840. Okay.
Stop full, and so that will be very costly, much more than actually the Brexit talks uncertainty towards the end of the year.
Thank you so much. Ludovic Subran there from Allianz stays with us, and we'll talk a lot more about trade and maybe touch also on the emerging markets. Now, coming up, Apple's appeal. The company gets ready to deliver its next generation iPhones, asking suppliers to build at least 75 million units. We'll look at how demand for the product has held up through the pandemic. We'll also talk to the World Health Organization. That's coming up shortly, and this is Bloomberg.
New position opened for euro at 119,840. That's a long position, so 19,840.
This is Bloomberg Surveillance. I'm Francine Lackley here in London. Now, global trade is on course to recover more quickly than after the 2008 financial crisis. That's according to Germany's Kiel Institute for the Economy, the World Economy. It says shipping volumes are already back at levels that took more than a year to reach following the collapse of Lehman Brothers. The Institute also says, or it hints, that a V-shaped recovery is underway. Well, still with us is Ludovic Subran from Allianz. Ludovic, we talked about the U.S., we talked a bit about Europe. What do you do with emerging markets right now? And, you know, what kind of glimpse do you have into trade?
Well, you know, I think the Kiel Institute is very optimistic. The problem is the rebound in trade services, which is not happening. So the V-shape is just because there is no credit crunch. So the goods trade is actually revived, but it's still 10 to 12% below pre-crisis level. So it doesn't look like a good shape to me, and for good reason, because most emerging markets that are importer of investment goods and most emerging and advanced economies that are consumers are not completely back. They're plateauing at 80% of the consumption patterns. So for us, global trade is going back to pre-crisis level only by 2023. So just go figure. When you talk about emerging markets, it's very interesting to see that the current monetary and financial conditions are good for them. The cheap dollar is good, and the very dovish Fed is good. But will that last? You know, we talked just before the break about the dollar. If the dollar were to strengthen again, we could see a wave of very difficult times for some of the emerging markets that are battling the virus, but also battling credibility of their policies and their institutions. I'm talking about Brazil here, Mexico, South Africa, India. And so for us, emerging markets is really in the eye of the storm, and as an asset class, but also I think the risk for emerging markets right now is going a bit too far when it comes to their economic policies. We see a lot of emerging markets doing QE. We see a lot of emerging markets doing quite profligate fiscal policies, but the problem is that this will cost a lot on the currencies, and you see that, you know, in the Turkeys and the Kenya of this world. Emerging markets currency are very volatile, and we expect that to continue in the next 18 months.
I mean, is there anything that actually, you know, what do you do with countries? So you've enumerated the countries that could be in difficulty if the dollar, you know, wobbles from here. Is there anything else that you see value in emerging markets? I don't know whether there's a China play right now.
Yeah. There is, you know, emerging markets, especially South Asian and East Asian emerging markets are doing very well because they had the fiscal room to maneuver, and their policies are quite credible when it comes to managing, you know, inflation, but also more generally currencies. And China is back faster. So all of these emerging markets that are in the trade catchment area of China are actually doing much better. And indeed, liquidity is very vast. So most of these emerging markets can actually function well. The problem for these emerging markets is that 1 out of 4 or 1 out of 3 jobs are related to either tourism or the manufacturing base that is currently on pause. And so the big question is, are they ready to really help the middle class go through a big drop in activity for longer term? Just look at Indonesia. They closed their borders till 2021. But tourism, remittances, they are a big part of Indonesian GDP. So how do you offset this in the longer run beyond the macro indicators that are going well for your country because you have the room to maneuver? And so for us, that's really what most analysts should look into, is the detail of policy decisions taken by emerging markets, because they're very different from one country to another.
Thank you so much, Ludovic Soubrand there, a chief economist at Allianz, staying with us. Now, coming up, Zoom soars on surging sales and forecasts at top estimates. Later today, we'll also talk to the company's chief financial officer, Kelly Steckelberg. You don't want to miss that interview. This is what the markets are looking at. So they're looking at some of the data that came out of Europe today. They're also looking at some of the data that came out of China. In fact, if you look at European stocks, they're climbing after Chinese manufacturing data seem to indicate that exports are underpinning a recovery. I'm looking at the weaker dollar. It seems to be fueling a broad advance in commodities, with copper, for example, climbing past $6,800 in London. Treasuries, little changed. This is Bloomberg. another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, AstraZeneca has started a large-scale human trial of its coronavirus vaccine. The shot invented by researchers at Oxford University is one of the farthest along the various COVID vaccines in development. Well, joining us now is Hans Kluge. He's the World Health Organization Regional Director for Europe. But Mr. Kluge, thank you so much for giving a bit of your time to Bloomberg. How hopeful are you that we'll get a vaccine at the end of 2020?
Well, there has been an unprecedented coordinated effort globally with an increasing number of vaccines which are in clinical trial in phase 3. So I think the hope is there. I wouldn't say necessarily before end of the year, but basically that's not the key issue. The vaccine is not going to be the end of the pandemic. The end of the pandemic is going to be when we as people are learning to live with the pandemic, and that can be even tomorrow.
But Mr. Kluge, first of all, how do you live with the pandemic? Does it mean that social distancing needs to happen at all times? Does it mean that mask wearing also needs to happen outside? And will people do it?
Right. This pandemic has costed far too much devastation and human lives. But at the same time, it's a kind of a dress rehearsal for future threats. It is not as infectious as measles. It's not as lethal as Ebola. So in that sense, we're living in a world of viruses. What we need is governments to take their responsibility and communicate clear, instill public trust and hope, and people to embrace the public health measures, some of those like you were just mentioning.
Governments are dealing with this very differently. It's different in France than it is in Spain, that is in Italy and the UK. Who gets it right? Is it safe, for example, to send our kids back to school?
Right. Schooling is an absolute must. Yesterday, I was co-chairing with the Minister of Health of Italy, Roberto Speranza, a meeting for all 53 countries on safely opening the schools. Children and learners have been suffering too much due to the school closures, from the education point of view, but also mental health, social well-being, and let's not forget also people who are unfortunately locked up in abusive atmospheres behind the lockdown. So it has to be done in a safe and gradual way. We cannot exclude that schools will have to be closed temporarily and locally, and that's something that we have to anticipate, but we cannot open societies without opening the schools first.
But Mr. Kluge, when you say that we shouldn't pin our hopes on a vaccine and need to live with the virus, would you say that people then should not go to work, but try and work from home? Like, do we need to act as if we were in like a half lockdown at all times? And is it because you don't believe that we'll have a viable vaccine, or that it will just arrive too late?
No, I am very hopeful for the vaccine, which is very, very important. And that's why WHO established the COVAX facility together with Gavi, close collaboration with the European Union, who is doing a tremendous job. So the vaccine is very, very important. But what I mean is, it's not a one-size-fits-all. There might be, we still have to work on vaccine hesitancy, for example, in many countries. And we cannot foresee which other viruses will come into our lives. So what I mean is, we need a new reality where, for example, even in our own work environment of the United Nations, teleworking, digital health will become much more important, but leaving no one behind, because some people also are digitally poor and we have to help them.
How difficult are going to be the winter months? How much more difficult will it be once we're indoors, once we can't really go out, where we understand that the virus gets spread less?
I really thank you for this question, because the question I'm getting often is we see an increased number in cases, but not in hospitalizations and in mortality, which is true. However, we see three phenomena coming together now when we will shift to the winter. One, opening of schools and the academic year. Two, the influenza season. And three, the excess mortality in elder people linked to the winter. So we may see a more tough situation in October and particularly late November, but the key is we're not back in February. In February, we're caught off guard, and the default option was to lock down and reboot. Now we can target the virus and not target society by working localized.
But Mr. Kluge, would you shut down restaurants and bars to make sure that actually schools can remain open?
Well, the school is not a standalone environment. It is embedded in the community. So the measures in the school has to reflect the heaviness, the violence of transmission in the community. So if the community has sporadic cases or there is really a very heavy transmission is different. What we need to do is stick to the basics. For example, avoid mass gatherings, wear the masks where we cannot guarantee a physical distancing of 1 meter, cough hygiene, hand hygiene, staying home when sick. So the basic measures. And we have to look at the epidemiological data, national and locally. And that's why I cannot give a general answer for all situations.
Can we reach herd immunity without a vaccine?
This was debated a lot, particularly in the beginning. What we see now is, number one, people who got the virus can get it a second time, still rare, but it happens. And secondly, that even in places where there has been community transmission of the virus, the herd immunity is about maximum 16%. So the majority of the population is still susceptible. So the virus is still there. If we see a better situation, it's not because the virus has gone away. It is because the drastic measures. So when we lift really the drastic measures, it's normal that we're going to see a peak.
But if people can get the virus again, and presumably once you have it, you should have antibodies, and maybe these fades, how can you still be optimistic about a vaccine that actually works?
Well, that are the caveats, of course. But as I was mentioning, we have never seen in history where public sector, private sector, the people themselves are working together for accelerating research and science. So I am quite hopeful that together, all the measures together, we will be able, in fact, to push back the pandemic. So for me, I'm hopeful, and we should give really hope to the people, but still we have to be vigilant and cautious. Ultimately, our behavior and the actions of the government are the most important. Where the response was drastic and prompt, the policy options were the right ones. But where the virus has been merciless is where we have seen partisanship, denial, and disinformation.
Thank you so much for joining us. Hans Kluge there, the WHO Regional Director for Europe. Now let's get straight to the Bloomberg First Word News. Here in London is Laura Wright. Hi, Laura.
Thanks, Francine. Joe Biden has hit back at President Donald Trump, rejecting claims that Americans will be less safe under a Democratic administration. He denied he would be soft on crime, invoking his record in public office. He also criticized those who've turned peaceful protests into riots and called out the president for fomenting violence across the country. President Donald Trump is planning to visit Kenosha, Wisconsin, the city where 2 protesters were killed last week. Speaking yesterday, he suggested the man arrested over the shootings may have acted in self-defense. Presidential rival Joe Biden slammed the president for not calling out the teenager Kyle Rittenhouse, who's been charged with homicide. Investors should position for the rising odds of President Trump winning re-election. That's the take of JP Morgan. It says betting markets for the November poll are now nearly even, and the Wall Wall Street lender says that's largely due to the impact of recent violence on public opinion and potentially also bias in the polls. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. Now, coming up, we'll hear from our interview with the Hong Kong Exchanges and Clearing Chief Executive, Charles Lee. It comes at a time when healthcare-related listings have surged to a record during the pandemic. That's coming up next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the Hong Kong Exchange has kicked off its flagship biotech summit. The virtual event comes at a time when healthcare-related listings in Hong Kong have surged to a record amid the COVID pandemic. Earlier, we spoke to the Hong Kong Exchanges and Clearing Chief Executive, Charles Lee.
This is just the right thing to do at the right time, and it's such a big sector. And China is such a big country with very massive aging population, huge healthcare challenges, and lagging drug development. So all of this require Asia to have a center for biotechs so that we can support research, we can support the massive healthcare reforms that China finally kick off. I think that's a very big event, because China finally, just literally 4 years ago, brought the entire drug administration system into exactly the same, almost as FDA. In fact, they call themselves a CFDA. That reform essentially bring China's standard of governing drug administration, pretty much the same with the U.S. So that reform set the foundation for us to be able to, again, take a huge reform in the biotech sector in terms of listings, because they have no revenue, obviously, before they can even sell anything. They need to have a government approval, but they were really heavily regulated. So we thought that previous history of being able to be regulated allowed them to be listed, despite the fact that they do not have the traditional financials that typical companies that we ask for before they can list here. So it was a great event. It's a milestone. We never thought COVID-19 is going to hit us, but now looking back, I don't know how we could cope without this new sector that is allowing so many companies just to join the race, finding a vaccine, finding therapeutics, and finding solutions.
So what's the edge for Hong Kong then? Because we know that China has domestically also been deregulating to make it easier for some of these particularly unicorn companies to list domestically on the Starboard, or making it easier for them to list on the Chinex as well. So what's the differentiating factor for going to Hong Kong?
Well, we have always, for the last, 7 out of the last 11 years, the 7-11, we are #1 in terms of IPO. So there is just, we are the IPO center around the globe. And so, that's just the tradition. And also a drug development, in this space is very international, and requiring tremendous amount of scientific collaboration between the US, China, and Europe. And the scientists are really all over the place. They're writing, they're publishing. So there need to be a very significant international component to it. So Hong Kong provide that great international connectivity. And our rules, obviously, before couldn't really handle this. So we have gone through a massive reform and really allow all pre-revenue, but second phase clinical trial companies to come. I think China is trying to essentially do a similar review and similar reform. But I think at the end of the day, it's about money, it's about scientists, it's about working together. So I think we provide that unique combination.
But HKX is not done yet, right? What more will you see in terms of reform, and what sort of tweaking in the rules could we see as you try to attract more listings?
Well, I think in the broader reform, because Chapter 18A, which is the pre-revenue biotech chapter, is a part of a very large comprehensive reform of really changing the landscape and changing the composition of our market. So a lot of reforms have to do with WVR, VIE, and many of the U.S. companies have certain unique corporate governance structures that do not necessarily fit in here. So we need to find a way to see whether we can make it work for them eventually to all come back. But for specific biotech 18A, I think the bulk of what we needed to do is pretty much behind us, done. But there are a lot of tweaks here and there, and just to make the offering a little bit more, easier. And so there are a few things that we're working with our regulators, our listing department colleagues, but we're not talking about fundamental change.
Well, that was the Hong Kong Exchanges and Clearing Chief Executive Charles Lee speaking to Bloomberg's Heidi Stroud-Watts and Sherry Ann. Now let's bring our latest Bloomberg scoop. Apple has asked suppliers to build at least 75 million 5G iPhones for later this year. Now that's roughly in line with last year's launch. Joining us to discuss all this is Danny Berger. Danny, good morning. 75 million 5G iPhones. What exactly does this mean for Apple?
Well, this means it's a really positive sign in terms of demand. Yes, it is the same as last year. Indeed, it's also the same as 2018. But keep in mind, the context here is we're in the middle of a pandemic, in the middle of a recession, and still demand is holding steady. So suppliers, the big beneficiaries, of course, we've seen a lot of the suppliers gain today, STM Micro, for example, in European trading. But in some ways, this shows us that Apple is sort of the ultimate stay-at-home play. You could say perhaps people don't want to buy more expensive MacBooks or iPads, but on the other hand, if you are now working at home, these are tools that people are buying and using because they're no longer in the office. Apple also, we've learned they're going to have a product blitz throughout the fall. This is what everyone gets excited about. 4 new models of iPhones going to hit in October, as well as a new iPad Air, a smaller HomePod, their HomePod speaker, 2 new Apple Watch versions, which they're hoping will compete with the Fitbit, some more exercise gear, and they're launching an over-the-ear headphone, the first time they're doing it, that's not going to be labeled with the Beats headphone. So the fact that they're coming out with so many products also just shows their confidence in demand, despite the fact that the pandemic has not yet abated, Francine.
Danny, speaking of tech, a number of online trading platforms also experienced outages yesterday. Have they now been resolved?
So what we've seen, yes, indeed, they have been resolved. So we've seen Robinhood, for example, TD Ameritrade, Schwab, Vanguard, all have glitches yesterday. Now, this does tend to happen, but it's more rare that they all happen at the same time. I've heard from some strategists that think it's because we had an Apple and Tesla stock split, as well as a Dow Jones rebalancing, but still at a bad time for a lot of investors who wanted to trade these names like Apple and Tesla as they were soaring to new heights, and a lot of trading volume in general, Francine.
Danny, thanks so much. Our Danny Berger there with the very latest on some of these hot topics. Now, coming up, we'll get more on the pharma sector as AstraZeneca starts the final stage of its COVID-19 vaccine trial. That's coming up shortly, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get back to one of our top stories. And AstraZeneca has begun large-scale human trials of its coronavirus vaccine in the U.S. It plans to enroll as many as 30,000 adults to test the shot. A final stage test is also underway in the UK and could yield preliminary results as soon as next month. Now, the vaccine was developed by researchers at the University of Oxford. Well, for more on all of this, let's get straight to Sam Fazeli from Bloomberg Intelligence, who leads our pharma coverage. Sam, great to have you on the program, as always. How happy or how convinced are you that this AstraZeneca vaccine will be here quick and will be safe?
Hi, Francine. So, based on the data we've seen to date, we haven't seen any new data from them. The vaccine appears to work in non-human primates and in humans in terms of inducing an immune response. So I'm very happy to see that they're starting a large U.S. trial, although they will be accessing some of the South American countries such as Chile and Peru were mentioned also for that trial. But we're going to have to wait to see how this really does in human trials in terms of protection. We know they induce immune responses. We need protection data.
So do you worry more about protection, or do you worry more about the safety of the vaccine?
Oh, safety, of course, is paramount, as we've always said, because you're treating healthy people, essentially. But you're going to have both hand in hand, and there is a trade-off. If you get a 90% protection against severe disease, for example, or reduction in hospitalizations, then you might accept slightly higher, a lower safety bar, if you like, versus if you only had a 50% benefit. So it's going to be, as always, a tug of war between safety and benefit levels.
I mean, how do you square the two? If people don't feel it's safe, then they won't be vaccinated. Sam, how long does it usually take to develop a vaccine such as this? I mean, does this have a basis? So, is it part of another vaccine, and so would it be deemed more safe than if they started from scratch?
Yeah, no, nothing like that. It's completely new. So, in fact, most of the vaccines that are leading are completely new. And at the end of the day, it doesn't actually matter whether the technology was used previously or not, because in some cases, even if you've done the technology that you used before and you go into a new virus, you find different types of side effects. But let's put it this way. The early side effects we'll see will be the types of effects in terms of high fever, myalgia. Would be odd if we saw the very rare forms of side effects like we've seen with an old Glaxo vaccine called Pandemrix, which caused narcolepsy in a very few people when it was into a much larger population. So those kind of side effects you will only ever know once you've done 1 million, 2 million people, that sort of number. I mean, maybe less, but not from the phase 3. The phase 3 will tell us how safe it is acutely.
Right. Sam, we're only, September 1st, and a number of countries are seeing a huge rise in the number of infected. We're not seeing a similar rise in the number of deaths. Is it a different kind of population that is getting infected with COVID-19 now, or is it that it's, the vaccine is less violent than it was in April and May?
Yeah, I think there's a combination of things going on. If you look at the data that led the FDA to approve the convalescent plasma in the U.S. For emergency use authorization, you saw a significant drop in the mortality from even the months of April, June to July, or April, May, June, sorry. And that is probably to do a lot more with, and there wasn't any changes in the age profile of the individuals or anything like that. So what I think you were seeing there is basically less sick people getting the disease, and also the hospitals and clinicians being a lot better at managing the disease. Yeah. And of course, we've had drugs that work now. So that.
Sam, thank you so much. Sam Fazeli there from Bloomberg Intelligence. Bloomberg Surveillance continues. Risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Four more years, while JP Morgan says investors should position for rising odds of Donald Trump being reelected, the president visits Kenosha, Wisconsin today. Better than feared, the German government expects this year's contraction to be less severe than previously forecast. The economy minister, Peter Altmaier, speaks this hour. And Apple's production blitz. The tech giant asks suppliers to build at least 75 million 5G iPhones for later this year, in a sign that demand is holding up. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lackman, London, Tom Keene in New York. Tom, we'll have a robust conversation on the economy. We're also getting some inflation numbers out of Europe, actually falling to 0.2%, minus 0.2%. That's the lowest in 4 years. But as you and I were talking off screen, it's all about school reopenings, and some schools may be getting it better than others. Some deciding to stay at home, and others with class attendance.
It's certainly a different August, and it's certainly a different 1st of September. It has transfixed the nation here. This back-to-school idea folded into the pandemic as well. In the markets, Francine, there's no question. I'm looking at a weaker dollar today, a profoundly weaker dollar, even as equities lift a little bit here. Tech's still lifting.
Yeah, a weaker dollar also is giving a lift to a lot of the commodities, so we'll have a full roundup of some of the asset classes. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, President Trump suggests that a man arrested for killing 2 protesters in Kenosha, Wisconsin, was acting in self-defense. At the same time, he criticized the killing of one of his supporters in Portland, Oregon, over the weekend. The president travels to Kenosha today. Meanwhile, Joe Biden flipped the Republican slogan that, quote, "No one is safe in Joe Biden's America." He said the president can't stop the violence because for years he has fomented it. JP Morgan Chase says investors should prepare for the chance that President Trump gets re-elected. The bank took a look at the polls, and it estimates there could be a shift of up to 10 points from Democrats to Republicans if the perception of protest turns from peaceful to violent. And the pandemic has created tons of red ink for Chicago. The city projects a budget deficit of $2 billion through 2021. That includes $800 million from this year. The coronavirus has decimated Chicago's revenues. Mayor Lori Lightfoot warns there could be layoffs of government workers. She's called for more federal aid to cities. And it's a sign that Apple's most important product is holding up in the midst of a recession and pandemic. The company has asked suppliers to build at least 75 million 5G iPhones for later this year. Bloomberg's learned that Apple anticipates that shipments of the next generation devices could hit 80 million in 2020. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities. It's not a grind, but it's just an ever lessening of the real yield. The real yield is down nicely, negative 1.09 right now. That's not a record low for that huge negative real yield, but it's one indicator. Kit Jukes with a smart note on that about 20 minutes ago. the yield space is higher yields. Remarkable what we saw through August, 1.50 in the 30-year bond. The VIX is magical. I mean, the markets are churning right now with the tech up, but the VIX 25.88 really shows the dislocations that we see on this first day of September. Francine?
Tom, I can't believe it's September already. Dollar, as you're saying, falling to a two-year low. That's kind of moving, for example, commodities. So the weaker dollar fueling a broad advance in commodities. I wanted to mention copper. It's just below here in London, 6,800, but that's quite a significant level. Treasury is pretty much a little changed. Then I also wanted to show you yuan. So China's renminbi touching the highest since 2019. We did have some pretty good Chinese manufacturing data indicating that exports are underpinning a recovery. So we'll talk about the markets, but I think we'll probably start strong talking about dollar and some of the currencies. Let's get straight to Gene Frieda. He's PIMCO Global Strategist. Gene, great to have you on Bloomberg Surveillance. It's been way too long, so thank you so much for joining us. Gene, when you look at dollar weakness, was this in part because of what we heard from inflation targeting from the Fed yesterday? Or is there something broader at play?
Yeah, I don't think it was something new per se yesterday. I think it's more about how the change in the Fed's mandate sort of percolates into market psyche. A lot of this is really about not so much, I think a lot of people focus on the mandate itself and say, okay, not much has changed. It's evolution, not revolution. But basically the Fed is committing to achieving its sustained core PCE of 2.5%. In a way that will probably lead to more pressure on asset markets on the upside and more dollar depreciation. Without dollar depreciation, it's very hard to see how you get that. And ultimately, the way to do that is basically by pushing down real bond yields. And so I think, the focus of the Fed speakers this week will really be on giving signals as to whether or not we get the first down payment on this strategy, which is a strategy that lasts over the cycle, if we'll actually get that down payment in September.
How low, Gene, do you expect the dollar to go?
It really depends on the time frame. The discussions we've had are really about the speed of the decline. I mean, my assumption is that over the cycle, we will see another, 15% move lower in the dollar. I think that's a reasonable expectation, given the commitment that the Fed is making to keep real bond yields low and likely falling as the economy recovers. Now, one big question with that is basically whether or not other central banks respond in kind.
Yeah.
We just saw a negative print on European inflation. I think that's fine from a dollar perspective to the extent that U.S. easing imparts easier financial conditions to the rest of the world. That tends to be positive for risk appetite, and that would typically be dollar negative as well. So it really is more a question about breadth of the dollar decline and whether or not it continues to be concentrated in G10 currencies or it starts to broaden out to emerging market currencies.
Gene, nicely said. Love having you on here with these dynamics that we're seeing right now. Gene Frieda, when does Europe squawk? I've got a lot of guests telling me they really will hold out and not complain until 130 euro, even 135. Some people have said, I don't buy it for a minute. When does Europe start complaining about weak dollar?
Yeah, I think it's some combination of the pace of acceleration and the context. And really the context, in my mind, is more about a European recovery that is continuing. To the extent that we start to see, European recovery faltering, partly as a function of a strong currency, partly as a function of a weak export environment, then we would start to see complaints coming to the fore. I don't think we're there yet.
Agreed.
But I would agree, 125, 130, we start to see those concerns be more marked.
Gene, tell me about EM here. I mean, it's been very contained. I've been watching EM, even Turkish lira backing up a little bit today has been relatively contained as well. Why is that? Why hasn't EM adapted and adjusted to the Powell landmark speech?
Yeah, I think part of it reflects the fact that there are just a huge amount of uncertainties within the emerging markets right now. Going from some of the most basic lessons of the pandemic, the speed with which you contain the virus probably has some correlation with the extent of the scarring. Emerging markets went into this crisis troubled with difficult growth backdrops. They have less policy space. They didn't contain the virus as well. And I should be more specific rather than branding all emerging markets with the same brush, because it really does relate more to Latin America, parts of Africa. But the bottom line is that these economies are suffering. Central banks are using easier U.S. conditions to ease monetary policy. That's really unprecedented in response to a global recession, that emerging markets can do that. It's actually very good for emerging market credit quality over the cycle, but it's bad for currencies. So really what you need to see is kind of the spillover from easier U.S. financial conditions becoming so broad-based that it lifts all boats regardless of domestic fundamentals. And I don't think we're there yet. We need to see a little more water flow under the bridge of global recovery before we get to that point.
Jean, what's the chance of a second lockdown or a third lockdown or another lockdown, let's call it, this winter? And where would that change the scarring? What will be scarred the most in the world economy right now?
Yeah, I think of the concern I would have is if we have another global synchronized lockdown. I think the probability of that is quite low. I think the probability that we have localized lockdowns is reasonably high. And the central question in my mind is how broad those lockdowns are. Are they lockdowns in countries? Are they lockdowns in cities? Are they lockdowns in states? And to the extent that we can narrow the scope of those lockdowns and kind of isolate it, I think that, coupled with the fiscal bridge, allows the market to look through it. So it would be crazy not to expect some lockdowns. In terms of the scarring itself, I mean, I think that really comes back to the question of fiscal policy support. I would expect more scarring in places that have less fiscal space. And you can imagine emerging markets fit into that boat quite centrally, whereas in most developed economies, that's not the case. It may be the case in some of the European periphery, but again, that's why they've been so intent on avoiding secondary outbreaks.
Gene Frieda with us. We're going to come back and talk on the Fed, talk on Jackson Hole. There's some theoretical things I really want to dive into with him as we talk to Adam Posen yesterday before Posen's important comments with Richard Clarida. Coming up, the top of the 7 o'clock hour, futures green, S&P, Dow futures rather red, S&P futures green. On the dollar and on the rate structure, as we speak to Gene Frieda of PIMCO, we will speak with Mr. Jukes of Societe Generale. Francine Lacroix and Tom Keene, stay with us. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
I personally believe, and I think a number of members of the committee believe, that there's potentially a place for yield curve control, but that yield curve control really most robustly is a complement to forward guidance and traditional large-scale asset purchase programs. But there certainly could be circumstances where it would be considered, and we were very clear in the minutes of our July meeting, and I tried to be very clear in my speech today, that it's certainly something that's in the toolkit.
Adam Posen of the Peterson Institute with the vice chairman, and let me editorialize and say we need more of this. We need more of our frontline monetary theorists interviewing other frontline monetary theorists. Nobody does it better than Dr. Posen. It is a public service, really, really extraordinary set of headlines from the vice chairman yesterday. We'll get to that in a moment. Francine, help me out here. Mr. Altmaier of Germany, I love what he says here about the essence of the German economy. They have maintained that.
Yeah, so Tom, we heard this morning that actually the German economy may do better than expected, but Mr. Altmaier really was some important headline saying we can control the rising virus numbers without the shutdown. And this, Tom, is really the trillion-dollar question for any politician, is how do you avoid the number of infections really rising significantly whilst at the same time avoiding a full lockdown, which puts the economy on its knees. So you can do local shutdowns. We'll see how it goes, but we heard it from France and Germany now that they don't want to go back into full shutdown.
Well, it'll be extraordinary to see, and of course, this is nation by nation. Every nation, as Mr. Bremer would say, for themselves. With us, Gene Frieda of PIMCO. Gene, I've got a massive conundrum going, and I know it's going to be solved on the x-axis, short-term, medium-term, long-term. Vice Chairman Clarida talks about yield curve control, but I believe we got a Powell speech and a new framework looking for higher inflation. How do you do both? How do you do a compression of yields while you're looking for higher inflation? That's not in my coursework.
Look, I think the aversion to yield curve control within the Fed has largely been about giving up optionality that you don't have to give up. No one is testing the Fed at this stage of the cycle on its commitment to low yields, so there's no reason for them to be giving up that optionality for something that it may need well in the future. So I think that, it's really a question of whether or not you get to a point where the market is testing the Fed, trying to push yields up as the economy recovers. And it doesn't look like that will happen anytime soon. To me, the really interesting thing I think about the outcome of the mandate was, and how you kind of transmit that into markets is, there's everyone believes that inflation is going to be above 2% before the Fed hikes, but there's a very wide range of expectations around the growth rates and unemployment rates necessary to get the Fed to hike. And I think that's really where the surprise comes. Now, that's way in the future. The question is the Fed going to step it up here? Are they basically saying we're going to try to get there faster? And I think that's why September is such an interesting meeting.
Well, so yeah, I'll go with that, but I'll also go with the idea that the PIMCO House call of 2 years ago and 3 years ago, in hindsight, has been absolutely brilliant about a really sustained lower GDP growth. Do you stick with that? I mean, in your end of summer confabs and what you're going to do this fall at PIMCO, are you suggesting that Q4, Q1 will be soggy? And that solves a problem for the Fed? They've got to adapt and adjust to weak GDP?
Yeah, I think that's still our base case. I mean, I think, we expect the recovery to continue. We don't expect it to be uber robust. I think we're at a point where you start to see a flattening of the curve, of the recovery curve. And that basically reflects the fact that the easy part of, ending lockdown and the initial fiscal stimulus is starting to roll off. So, from that perspective, I think that the challenge that people have is that they assume that a particular asset market reaction should be associated with a similar growth reaction. That's not really the case. The Fed is pushing on asset prices to lift a reluctant GDP, off of very weak levels.
Gene, when do we start worrying about debt? I mean, here in the UK, there's, now talk about significant tax rises to make up for some of the debt that, was generated by the lockdown. Are we going to see that across the world? And what does that mean for fixed income?
Yeah, my sense is that we probably start to worry more about debt once, in 2021, presuming that there's a vaccine, and you start to be able to differentiate between countries that have suffered material scarring and material degradation of growth prospects, and those who can sort of continue to lift off even as fiscal support, income support, labor market support is curtailed. At the moment, everyone is doing it, and so no one is really punished for doing it. But I think 2021 will really be a trying time and a differentiating time across countries.
Jean, where do you see the most value right now?
In any asset?
Any, yeah. Do you buy gold?
Yeah, I mean, I do currency, so I'm going to tell you that I think we see a lot of value in being short the dollar. I mean, I think, the central banks are basically committing to keep, bond yields very low, bond prices very high. We certainly don't see value there. We see some value in credit, but I mean, in terms of, what can move and what can adjust, I mean, I would say it's really the dollar.
All right, Jean, thank you so much. Jean Frieda there, a PIMCO global strategist. Now, coming up on Bloomberg Markets, Kelly Steckelberg, Zoom Video Communication Chief Financial Officer, will have a couple of questions, of course, on this working from home and a significant increase in Zoom calls that we do daily. That's at 10:30 a.m. in New York. That's 3:30 p.m. in London. And this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Bloomberg Surveillance, I'm Rishka Gupta. Let's get your Bloomberg Business Flash. Shares of Zoom are soaring. The video meeting service reported the second largest sales surge among NASDAQ 100 companies last quarter. Revenue was up 355%, well above estimates. It's a sign that businesses and consumers keep flocking to Zoom in larger numbers than expected. Walmart's answer to Amazon Prime has a launch date. Walmart Plus will be available on September the 15th. The subscription program costs $98 a year, a discount to Prime's $119 membership fee. Walmart's service will include unlimited free delivery, including on groceries, and there will be discounts on gasoline. More than 50 black former McDonald's franchisees are suing the fast food giant. They claimed they were pushed by the company to set up shop in crime-ridden areas, and they say they were denied the financial help extended to white businesses. No response yet from McDonald's. The company said last month it would step up efforts to fight systemic racism. And that's your Bloomberg Business Flash. Tom Francine.
Ritika, thank you so much. Now, the dollar dropping to a two-year low. If you look at U.S. futures are climbing, European stocks are also climbing. We did have some pretty good data out of China. This is manufacturing data. It does seem to point to the fact, Tom, that exports are underpinning a recovery. If you look at the gains in Europe, they were actually higher about an hour ago, but we're seeing travel shares under a bit of pressure. Euro leading the charge against the dollar. That's also moving some of the commodities. I wanted to show you copper climbing past $6,800 a ton in London, now currently at $6,769, and treasuries pretty much unchanged. They're kind of trading sideways today. And finally, Tom, renminbi touching the highest since 2019.
Francine, the real yield is what we're watching more, and of course, Kitju's looking at that as we go to the next hour as well. Real yield negative 1.08. That is a deeper, more negative real yield over the last couple of days, and of course, that bounces off the dynamics of the headline 10-year yield, and then also inflation expectations, which are looking up. I haven't looked at that chart yet, but we'll have to touch upon that. Watching the equity market carefully. Yesterday, really, the Dow not participating. Of course, the new mathematics of the Dow with Amgen, Salesforce, and others, but certainly tech continuing to lift, and tech futures lifting big this morning. Maybe there's a stock split in the air we don't know about. This is important. This is where Francine Lacroix pulls eight. She's looking at the Cullinan at Rolls-Royce, probably in that glorious red color that they have. Francine has Torsten Muller-Otvos to do a drive-through on her next Rolls-Royce, the 10 o'clock hour. This is Bloomberg.
this is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We have to stop this horrible left-wing ideology that seems to be permeating our country. And basically it's weakness. It's weakness on behalf of Democrat politicians or Republicans. We don't have problems.
Do I look like a radical socialist with a soft spot for rioters? Really? I want a safe America.
Are you going to condemn the actions of vigilantes like Kyle Rittenhouse?
We're looking at all of it. That was an interesting situation. You saw the same tape as I saw, and he was trying to get away from them, I guess, it looks like, and he fell, and then they very violently attacked him, and it was something that we're looking at right now. And
He may believe mouthing the words law and order makes him strong, but his failure to call on his own supporters to stop acting as an armed militia in this country shows how weak he is.
Our presidential candidates, this is extraordinary. And of course, the President of the United States traveling to Wisconsin today. Be really interesting to see how he is greeted in Wisconsin. The mayor of Kenosha, among others, saying, maybe he shouldn't come, but he is coming. Donald Trump will be there. And of course, a very important state. We get perspective from Asia, but with our Washington experience, Jody Schneider joins us this morning. Jody, tell us how Asia is viewing this election. Tell us how the media in Singapore, in Hong Kong, in Tokyo are framing out this election post-conventions.
Yeah, that's a really interesting question, and I think there's a bit of confusion because on the one hand, there was so much talk during the conventions about the pandemic and other issues, and now it seems to be all about these protests, some of which have turned violent. And so watching it has become more complicated, right? As you look at issues like the president trying to make this law and order pitch at the same time that he is president, and Joe Biden's argument that, well, you're the president, if you want there to be law and order, this is on your watch. So I think that is something from here that people are interested in. But particularly, of course, with the China-U.S. tensions, what they're really interested in are what is going to happen with trade, with economic issues, particularly regarding the U.S. and China, and will those tensions continue even if President Trump is not reelected.
And what's so important here, Jody Schneider, is the distinction between Biden and Trump as we do that on race in America, as we do that on protest and indeed riot. Jody Schneider, does Asia and particularly China, have they formed a distinction between Biden and Trump?
Yeah, well, I think with President Trump, clearly there's an issue, and people have the question about the dealing with the virus. That's something over here that, because they've dealt with the virus so much more effectively in terms of containing it in Asia, I think that's been a real question on people's mind. You know, why isn't it being contained more? Why isn't there more of a federal policy? And on other issues, I think they want to see, I think a lot of people here don't really understand what policy issues a Joe Biden presidency would drive, and that's something that I think it would be useful for him on the world stage to be addressing, to be underscoring in the few months he's got before the election.
Jody, how would a Biden administration actually deal with China? Would they be a lot more friendly with China?
Well, that's the perception, right? That because in previous administrations, President Obama, of which, of course, Vice President Biden had a large role in on foreign policy, and given his foreign policy credentials in the Senate, that is sort of an expectation, but maybe not. A lot of people think that things have changed. Some of this decoupling and some of these issues that have the U.S. standing up more, standing against China on a number of issues, including technology, they've now been here to stay. They've come to stay, and that even with a Joe Biden presidency, that there would likely be a tougher line on China, certainly than there was during President Obama's administration.
Jody, what are people saying? I mean, we had J.P. Morgan, saying that actually the market needs to look at President Trump having a second term. What are people saying in your region? I don't know if people are talking about, given that Biden becomes the next president, or whether they actually think that it could be President Trump for 4 more years.
Yeah, I think people are really watching this extraordinarily closely. Of course, the whole world is. But in Asia, a lot of this, again, revolves around China and what is going to happen with whatever administration there is. Is this still going to be, are these tensions going to continue? So I think there's a lot of thinking that, they're watching closely, but that they were surprised, of course, as the world was in Asia when President Trump won 4 years ago. And I think they view this as a race that could tighten quite a bit. And that there's no sure bets at this point with a couple months left to go.
All right, thank you so much. Our Jody Schneider there, our Bloomberg Senior International Editor. Now let's get straight to the Bloomberg First Word News. In New York City is Ritika Gupta. Hi, Ritika.
Hi, Francine Tom. President Trump suggests that a man arrested for killing 2 protesters in Kenosha, Wisconsin, was acting in self-defense. At the same time, he criticized the killing of one of his supporters in Portland, Oregon over the weekend. The president travels to Kenosha today. Meanwhile, Joe Biden flipped the Republican slogan that, quote, "No one is safe in Joe Biden's America." He said the president can't stop the violence because for years he has fomented it. The Trump administration is canceling contracts for ventilators with 3 companies. One is a $650 million deal with Royal Philips that was signed in April. The company supplied only a fraction of the 91,000 ventilators the U.S. had asked for in the midst of the pandemic. A government spokesman says there are 120,000 of the devices in the strategic stockpile. And the latest border clash between India and China points to a long-term conflict. India says its troops were able to stop a push by Chinese forces to claim more ground over the weekend along the disputed Himalayan border. Both countries have moved thousands of troops to the region, along with tanks, artillery, and fighter jets. And Elon Musk continues his climb up the rich list. The founder of Tesla passed Mark Zuckerberg yesterday and is now the 3rd richest person in the world. According to the Bloomberg Billionaires Index, Musk is now worth $115.4 billion. Shares of Tesla kept their rally going following a forward stock split. They're up 496% this year. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine Tom.
Ritika, thanks so much. This is really something you need to know on a September 1st. The mathematics of cases and deaths in the Empire State, in New York State, is absolutely extraordinary. Possibly it will be a victory lap for the Lieutenant Governor, Kathy Hochul. She will join us in the 7 o'clock hour. Futures advance up 13. NASDAQ futures up 127. Wow. This is Bloomberg. Good morning.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Tom, Germany more optimistic on the economy than it was earlier. The economy minister, Peter Altmaier, presented new forecasts showing the hit from the pandemic will be less severe than initially thought. Well, joining us now is Esti Dweck, Natixis Investment Manager's Head of Global Macro Strategy. Thank you so much, Esti, for joining us. When you look at Europe, it seems to be at crossroads. So we had this investment plan that was actually signed off on the Commission, but we're now seeing a really worrying number of cases rising because of COVID-19. What countries will do better than others in Europe?
Well, I think that it's really going to be a question of how people can handle the rise in cases and keeping measures limited. I don't think we're going towards massive confinements. Clearly, some countries like Spain are struggling more. Germany has more, I think, self-discipline to start with, so it wouldn't be a surprise for them to come out ahead. But overall, Europe needed the summer months, it needed tourism, and it needed July and August to be open, and now it's going to pay the price a bit for that.
Well, how punitive is the euro rising for the European economies, and when do they start saying something to the U.S.?
Well, I think that's going to be the key question, and we're going to see at the next ECB meeting that probably a strong euro is becoming a headwind. Europe is a very open economy. It's externally focused. It depends on its exports. And, at the beginning, the stronger euro is positive, and at some point it becomes costly, and we're getting closer to that level.
Esti, what is the shadow, if you will, into September and into October? What's the thing unobservable that we need to try to observe?
Hopefully not too much that we don't know about or that we're not yet looking for. I think we absolutely need Congress to get together and pass the CARES Act too. I think that's probably one of the critical aspects where markets are pretty optimistic about it, and we expect the next phase to be delivered. But I think that's going to be critical for the equity market rally.
How do you fold in Q4 into Q1? There's a number of houses, I'm going to say led by Peter Hooper at Deutsche Bank, really looking for a slowdown if we don't get stimulus. Do you just frame out a slowdown into 2021?
We know that the momentum is slowing, and we know that in areas where cases are rising more than others, the momentum slows even more because you do have a little bit of self-discipline happening as well. So Q4 was not going to be as strong as Q3. Now, if we don't get the stimulus, it might be a bit more abrupt, although the amount of extra income that Americans received up until August was, above expectations. So that might carry them through a little bit longer. But we do expect Congress to make get a new package. So hopefully we won't have this fiscal cliff we're talking about.
Where do you see inflation heading, Esti? Is it something that we should start worrying about? Or, do we risk deflation pressures first?
Well, we just got the Eurozone numbers, and, we're back in negative territory, at least not on core, but on the rest. And we know central banks are still more worried about this being a deflationary event than an inflationary one. I don't think deflation is a risk, but I also don't think inflation is a risk and won't be a risk for quite some time. The Fed is trying to underpin inflation expectations, hoping inflation is going to get to 2% or even a bit above for a certain period of time. But I don't think it's a concern for now at all. A lot of the fiscal stimulus we've seen is income replacement. It's not adding to it. Liquidity is abundant, but it hasn't, made its way through the system completely either. So I think still some time before inflation's a big worry.
We haven't even mentioned Brexit. If there is a hard Brexit, or if we go to WTO rules come January, how much will Europe and which country specifically will suffer more than maybe even the UK itself?
Well, So I think the question is, what does a hard Brexit look like? And even if they don't come to some agreement, and we had this conversation, I think, earlier in the year with our clients thinking, you know, if the deal doesn't go through, what happens? And you basically think for some of these key strategic industries, they're going to come up with some safety net policies to make sure you can move forward and you don't have a total stoppage of activity on January 1st. So we'd expect something like that to happen. So whether that comes out as mini deals or whether that's more emergency later in the year, you know, plenty of countries are at risk, but hopefully there's enough will to get those strategic industries in line to avoid the worst case scenarios.
Betsy Dreck, thank you so much. Within Texas, greatly appreciated this morning. We've got a nice lift to the market. Futures up 12, down futures up 16. Weaker dollar. We've talked a lot about that. I really want to focus on yields. We've come through on a 10-year 0.72%. A 0.75 would really be something. Coming up, Gabriela Santos, JP Morgan Asset Management. This is Bloomberg. Good morning.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishka Gupta. Let's get your Bloomberg Business Flash. In South Korea, prosecutors have indicted the de facto leader of Samsung Electronics, J.Y. Lee, on charges including stock manipulation. That could potentially put the head of the world's largest electronics corporation on trial for years. The indictment centers on whether Lee and Samsung used illegal means to help him take control of the groups founded by his grandfather. AT&T has kicked off a $15 billion debt exchange. The world's most indebted company is continuing its efforts to refinance more expensive obligations. AT&T has roughly $170 billion in debt. It's seeking private equity investors to buy the majority of its DirecTV satellite television business. And Bloomberg's learned that Hertz has gotten interest from potential buyers for its Donlen fleet business. The rental car giant filed for Chapter 11 bankruptcy in May. It's considering a sale sale of the fleet unit if it can get at least $1 billion. The money would be used to pay off debt. And that's your Bloomberg Business Flash. Tom Francine.
Thank you so much, Ritika. Now, AstraZeneca has begun large-scale human trials of its coronavirus vaccine in the U.S. It plans to enroll as many as 30,000 adults to test the shot. Now, a final stage test is also underway in the U.K. and could yield preliminary results as soon as next month. Well, joining us now is Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst. Sam, thank you so much for joining us. What you're very good at is telling us what these trials actually mean. If you test 30,000 people, can you tell if they develop the right antibodies? Can you tell if the vaccine is safe?
Oh, absolutely, Francine, and good morning. So with that sort of number, fingers crossed, you should be able to tell whether the vaccine has any effect on a whole variety of things, including, hopefully, death, hospitalization, the severity of the disease, etc. We don't expect it to be completely sterilizing, i.e. we expect these vaccines to still not be able to control people from actually catching an infection, but reduce the severity of the disease.
When will we know if the vaccine is actually safe enough for general consumption? You know, is it the first quarter of 2021, or will it take longer?
Well, I think the initial safety kind of thing that you're looking for would be, is there any acute side effects that you need to really worry about? And that, I think you'll know by the end of this year with these large trials. Pfizer announced today that they're at 20,000 patients out of their 30,000 target. So that's recruiting really rapidly. So they'll have that sort of data as well as Moderna.
Sam, where are we on comparative vaccines? Going back to the giant Maurice Hilleman, Robert Gallo on polio and such, are these vaccines we're developing radically different from the structure and process and distribution of the ones we know and love?
Yes. So the ones that you hear a lot more about, i.e. Pfizer, BioNTech, Moderna, and AstraZeneca, Tom, are the ones that are using completely new technology. The ones that go back to the original technologies that are tried and tested are those from companies such as Novavax and a European company called Valneva, which never turns up in the news much. They're developing a very old vaccine, a bit like the Jenner vaccine for smallpox.
Which is going to win the race?
Oh, God, I wish I knew the answer to that. I hope they all win, Tom, at the end of the day. But I think what we'll end up seeing is that some are better for some populations than others, and some are better at managing new mutations than others. What I can tell you is that the new versions, in terms of if you have a new variant of the virus, may be quicker to develop.
But Sam, how do we know that they're really safe? I don't know. I mean, I think we had a couple of polls saying only maybe 30 or 40% of the people would want to get vaccinated the first time around. You know, it's a bigger exercise making sure that people are convinced that it's safe, so that enough people have it to reach herd immunity.
Yeah, so, I mean, AstraZeneca's put out another press release as well, saying, look, we won't bend to pressure. We will just follow what the science tells us and what the trial tells us. Patients first. And I'm really glad to see that. You will only know the long-term safety of any vaccine, including those with the older technology base, after it's been in a sufficient number of people for a long enough time. So there's just no way of speeding that part of it up.
Sam, I mean, if there's something that you want to know now that would help with actually understanding the vaccine, do people, we heard last week that people that have been sick can still get reinfected. Does that put in question even the viability of a longer-term vaccine, or is it going to be like the flu vaccine that you need one every year?
Yeah, I mean, I think it could be like the flu vaccine, and honestly, Francine, I wouldn't get too excited with just 2 or 3 cases of rare, what may be reinfections, maybe not. It's very difficult to tell. So far, they seem to be quite rare situations, and only really caused disease in one, which was the U.S. one that was reported. I think it was Nevada. So I don't think I would get too worried about vaccines being protective or not. Maybe we'll need a booster every year or a new version every year. But, you know, the pharma industry is used to that, as you say, with the flu vaccine.
Well, I mean, the flu vaccine's there. What about the overlay, Sam Fazeli? I mean, a lot of people are talking about the overlay of the vaccine for this present disaster, plus the overlay of the regular flu vaccine. Is that going to be a normal process? Is that going to be something that just happens?
Yeah, I actually don't know the answer to that, John. Tom, sorry. I don't know whether you're going to be able to vaccinate people with the flu vaccine and the COVID-19 shot at the same time. But frankly, that's not going to be a question for this particular season, because in the next few weeks, the flu vaccine shots are going to be administered going forward. So it's more of a question for next year. And perhaps people can study that in the southern hemisphere, as the winter obviously is a slightly different time frame. So that is something that has to be looked at. But we are used to having vaccines on top of each other.
Sam, thank you so much for all of the wisdom. Sam Fazeli there of Bloomberg Intelligence. Now, this is what we're looking at today. I know there's quite a lot going on when it comes to currencies. The dollar definitely fueling a lot of the debate out there. Dollar extending some of the losses, U.S. futures advancing. If you look at European stocks, they're getting some 0.1%. Now, the euro, Tom, strengthening to just below $120. China's yuan also touching the highest since 2019, and really the weaker dollar underpinning some of these prices across commodities, with oil, copper, and gold posting gains, Tom.
Oh, very good. It's interesting to say the least. Dollar weakness here. I'm watching euro dollar maybe more than anything. As Francine mentioned, 119.80 on euro dollar. A move through 120 would be interesting. Certainly we hear that from our guests this morning. Coming up in the next hour, Julian Emanuel of BTIG on the oddities, the extraordinary equity market we're witnessing. Stay with us from London, from New York. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed, but the good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This morning, call it the Powell reset. Stocks they lift, led by stock splitting tech. Yields sustain higher. The dollar shows true weakness. Euro dollar, it nears 120. It is a conundrum. How can you wish upon a star for inflation and do yield curve control at the same time? That does not compute. And Biden in Pittsburgh, now Trump in Kenosha. The mayor of Kenosha, a Democrat, says, quote, "It is what it is." Good morning, everyone. This is Bloomberg Surveillance from New York, from London as well. Francine Lacroix back with us here after, I don't know, she was off 2, 3, 4 weeks, whatever. It was back to school. And
propping up the Italian economy, Tom.
Very good. What did you observe down there? I mean, they were hit so hard in March and then a real recovery, but it's a little dicey right now in Italy, isn't it?
Yeah, it is, Tom. It's interesting, actually, that you know how Italy was scarred because they were really very hard hit in March, and so it's just different rules compared to the UK, where actually the government has been much more lax. In Italy, you wear masks even if you're outside after 6 p.m., and that is a national edict. And people are just much more careful. In certain parts, it was pretty crowded, but everyone with a mask and people kind of overlooking their shoulder. They go back to school in 2 weeks in Italy. Here they go back to school this week, and I know New York is the same, Tom.
Yeah, it's absolutely back to school, and up we go. And each school is different. Remarkable how that is block to block on the island of Manhattan. Right now on the island of Manhattan with our first word news, here's Ritika Gupta.
Morning, Tom, Francine. President Trump suggests that a man arrested for killing 2 protesters in Kenosha, Wisconsin, was acting in self-defense. At the same time, he criticized the killing of one of his supporters in Portland, Oregon over the weekend. The president travels to Kenosha today. Meanwhile, Joe Biden flipped the Republican slogan that, quote, "No one is safe in Joe Biden's America." He said the president can't stop the violence because for years he has fomented it. JP Morgan Chase says investors should prepare for the chance that President Trump gets reelected. The bank took a look at the polls, and it estimates there could be a shift of up to 10 points from Democrats to Republicans if the perception of protest turns from peaceful to violent. And the pandemic has created tons of red ink for Chicago. The city projects a budget deficit of $2 billion through 2021. That includes $800 million from this year. The coronavirus has decimated Chicago's revenues. Mayor Lori Lightfoot warns there could be layoffs of government workers. She's called for more federal aid to cities. And it's a sign that Apple's most important product is holding up in the midst of a recession and pandemic. The company has asked suppliers to build at least 75 million 5G iPhones for later this year. Bloomberg's learned that Apple anticipates that shipments of the next generation devices could hit 80 million in 2020. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Thank you so much, Ritika. Greatly appreciated. Off the bottom of March, Apple is up 143%. That's over 600% annualized. Julian Emanuel is here to explain, but first let me do a data check right now with futures up 10. The NASDAQ continues higher. Julian Emanuel will explain. Francine, yields are higher. Julian Emanuel will explain. And the dollar's weaker. Francine, Julian Emanuel, explain. What do you see in the data?
I'm looking at something else that Julian Emanuel will explain,
Please.
which the weaker dollar lifting prices across commodities. So we'll talk oil, copper, and gold with Julian Emanuel. And then the only other thing I'm watching is renminbi touching the highest since 2019, Tom.
He is with BTIG, and he's had the courage to stay in the market, writing really, really smart, calming, precise notes. Julian Emanuel will explain. Julian, wonderful to have you with us on September 1 to kick it off for everybody into this final month of Q3 as well. Can you acquire shares this morning?
It's a heck of a lot more difficult than it was earlier this summer. We, in fact, would be a bit more cautious here. Essentially, what we've seen is obviously what we think is the beginning of what you would call the blow-off upside phase in the NASDAQ. But unfortunately, what that's entailed the last several weeks is the rest of the market is basically treading water, and that tends to not be terribly healthy when driven to extremes. So we'd be a little cautious here.
The microeconomic word is ambiguity. Julian Emanuel, yields are going up in an ambiguous way. Are they ambiguously good for equities or ambiguously not?
So at this point, it is a positive, no question about it. And I think when our thesis coming into 2020 was that the younger generation of investors would look at yields in a 10-year yield that was north of 1% at that point, and come to the conclusion that over a 30 or 40-year investing horizon, the need to go into equities would be compelling. That has in fact played out. But from where we stand right now, again, this dichotomy between the valuation of the NASDAQ and the rest of the market, those kinds of valuations will begin to get stressed with higher yields, probably not till we get closer to 1% and well over 1.5% in the 30 years, perhaps closer to 2%.
Julian, what market forces are at play right now? I mean, does dollar weaken much more from here? And if it does, are we going to see a trade war with Europe?
Well, so you're not quite at the point in our view where Europe is going to get uncomfortable with a stronger currency. That likely happens somewhere north of 125 euro dollar. But obviously, and you know, the equity market is certainly showing this, is that for the most part, U.S. exporters love the weakening dollar, which we think likely continues. Although, again, as we come into September, there is a massive positioning imbalance. You know, essentially, the short positions in the dollar are as large as they've been perhaps ever. And so that tends to mean a pause. But the longer-term trend towards a weaker dollar, we think, is well intact and has been really a near constant since the equity market bottom in late March.
Julian, what do you do with renminbi? I mean, we had some encouraging data out of China. Is China a blueprint or a template of how you can recover from the virus? And, you know, what does it mean for our Western countries?
Well, I think what we've seen is that the recovery trajectories really vary from country to country. Obviously, the main point of concern being, you know, what does the United States economic reopening, particularly with schools reopening, look like in coming weeks against the backdrop of the election, of course. You know, from our point of view, it's one of those things where nobody's really going to talk about where the Chinese currency is versus the U.S. It's sort of a level, you know, really below 7, but not too far below 7. That isn't that big an issue right now. I think both sides are reasonably content.
Julian Emanuel, I've got to look at Gamma with its 2 M's. And the idea here of Gamma, where we are, where we're heading, Gamma's acceleration, which can be a double-edged sword. Which is it?
Well, Gamma right here, we think, is incredibly valuable. Again, because you've had this very unique situation during the month of August where volatility has risen into a rising market, again, most pronounced in the NASDAQ. And what we've seen from the past, really the last time you had this kind of effect was the beginning of 2018, where the market continued running higher, and then you had the event subsequently, which was known as Balmageddon. So from our point of view, when you think about where we are now, in what is normally a challenged period for equities coming into a contentious election, Gamma is extremely valuable.
And Gamma is important. This is the derivatives, folks, and the dynamics of the Greek letters as well. And what's involved here, folks, is not the ability to make money, but maybe the ability to not lose money. Julian, everyone is talking about higher equities, but the VIX is elevated as well, with people saying Dean Kernan at Macro Risk saying the VIX ought to be 18, 19, some saying even lower as well. Explain to our audience the conundrum here, the mystery here. Explain why the VIX goes up even as equities elevate.
Well, there's definitely a conundrum, Tom, because basically the day-to-day movements of stocks actually would probably argue for a VIX closer to 15 than what we're seeing in the low to mid 20s. But we're discounting all these risk factors that we know are in front of us. Obviously, the election. Is there going to be a clear-cut decision when we wake up on November 4th? Is it going to take longer? And again, the economy, how clean is the reopening? Do we or do we not get stimulus? All of these variables really lead into why the VIX is much higher than realized. And again, the thing that ties it all together is the fact that the majority of the performance is clustered in really essentially 5 stocks in the NASDAQ.
Julian, what exactly is priced in? So is a second-term President Trump priced in at the moment, or a lockdown priced in?
So it is very interesting. And if you look at the market performance during the month of August, what it's telling you with that strong a rally is if the election were held today, the likely winner would be Donald Trump. Now, that is not necessarily the case, because what's happened is that when you've had August as strong as what we've had, particularly with solid June and July's, you tend to have borrowed from September and October. And in the past, September and October's coming off a strong August have been weak. Now, when September and October are weak, 6 out of 6 occasions, the incumbent party has lost the White House. So that really feeds into the uncertainty. And obviously, again, one of the biggest issues that is likely going to decide the election is how well the economy recovers. Do we see a resurgence in the virus? Do we see, an uptick in social unrest? And does it look like we're going to sustainably be able to grow headed into 2021? These are all questions right now.
Julian Emanuel, listen, we're going to drive this forward and particularly look at the equity markets here in a moment. Coming up as we set you up for September 1, the walk into the autumn months. Kit Jukes will be with us, the Chief Foreign Exchange Strategist at Societe Generale. Really looking forward to talking to Mr. Jukes. He is focused on that huge real yield, a negative 1.08%. From London, from New York, futures up 10. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we're having a great conversation with Julian Emanuel, BTIG Chief Equity and Derivatives Strategist. Julian, I wanted to come back to what we heard from the Fed yesterday and the slight change in the Fed's framework and the fact that it didn't seem to move the markets that much. Was that already priced in, how they look at inflation? Or is it that, the market is desensitized to that?
Well, I think we all knew where we were going with regard to inflation. And, Chairman Powell has basically made it no secret for well over a year. The idea of yield curve control is the thing that's probably a little more unclear. But from our point of view, we don't think it's likely that you're going to have explicit yield curve control. And if you do, it's likely to be sort of the 2-year and in maturity, which effectively the Fed controls anyway, setting the Fed funds rate, because the consequence of trying to put on yield curve control going further out really does create the preconditions for a drastically weaker dollar. And the Fed, as much as they want inflation, really don't want sort of inflation that could turn malign if you get, a huge uncontrolled dollar sell-off.
So what's the risk of rampant, and quickly rising inflation?
It's not that high. It really isn't. I think what we're finding out is because of this sort of economic reordering that we've had over the last 6 months, there are pockets of the economy and, certain goods and services and so on where you do see inflation, others where you don't. But at the aggregate level, it's still, the greatest challenge is getting to that 2% number.
Julian, I just looked at Fortress Diamond. And as I mentioned, Apple earlier up 140%, roughly in the same period. JP Morgan's up 30%, still 28% below where it was in February as well. I've now got a vector of higher yields. I've got a weaker dollar, and I've got the banks. Are you going to overweight the banks?
Absolutely. From our point of view, the most significant thing about what virtual Jackson Hole did was legitimize explicitly, again, this idea of higher inflation. And if you think about it, keeping the lower end of the curve stable towards zero implies the likelihood that if we get even a modest amount of inflation in an economy where you expect, 3 to 4% GDP growth next year, you're going to get a steeper yield curve. And given the valuations of banks and the fact that they've been penalized for being excessively prudent in terms of their loss reserves, we think there's a lot of upside there.
Give me some distinction here without mentioning, I know you can't mention individual names, but unless you want to surprise me, but give me the idea of what kind of banks will do better out 10 to 12 months.
Well, when you think about it, what's typically the case is that when you have a group as out of favor as the financials, where the perception is that there is this great degree of stress, you tend to want to gravitate towards the strongest, largest franchises, despite the fact that they do carry premium valuations. And then once it becomes obvious that the sector is going to work, that's when you go down in quality.
Julian, is there something right now that that people are buying that you want to completely stay away from? I don't know what you do with gold, for example, right now. It just seems, what's gold?
Well, look, gold is a diversifier, and gold in a lot of ways, aside from, something that accounts for geopolitical risk and a weaker dollar, part of the rationale for gold is that I think investors worldwide are reassessing the efficacy of a 60-40 investment allocation and what should bond holdings look like and what do you do with that incremental exposure. And it's found its way into gold. We think ultimately gold will move higher, but again, you've come a very long way in a very short period of time. So like a lot of the moves that we've seen, a period of sideways digestion is probably something that we'd welcome.
Julian, on the emerging markets, is there going to be a big repricing if dollar continues going lower?
Ultimately, there should be. But again, I think we have to really step back and think about how the dynamics of the virus have played out in different locales. You can't really paint the entire emerging markets with one brush. It's been more difficult in Latin America. Arguably, the experience has been different in Asia, but net-net, if the dollar weakens with regard to positive global economic conditions, which is our base case for 2021, that means emerging markets re-rate higher.
John Emanuel, thank you. We'll see you when Apple gets to $4 trillion as a market cap as well. Mr. Emanuel with BTIG there for a September reset of the markets. We're going to do this a lot in the coming days. Talk to fixed income and equity and FX strategists sort of about the state of the market after this most historic summer. Red and green on the screen. Gershon Distenfeld. AB, come on, it's Alliance Bernstein. AB, co-head of fixed income. Always interesting. That's coming up here in the 9 o'clock hour. Stay with us from London, from New York, with futures up 9. This is Bloomberg.
Decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas, un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
This is Bloomberg Bloomberg Surveillance, I'm Ritika Gupta. Let's get your Bloomberg Business Flash. Shares of Zoom are soaring. The video meeting service reported the second largest sales surge amongst NASDAQ 100 companies last quarter. Revenue was up 355%, well above estimates. It's a sign that businesses and consumers keep flocking to Zoom in larger numbers than expected. Walmart's answer to Amazon Prime has a launch date. Walmart Plus will be available on September the 15th. The subscription program costs $98 a year, a discount to Prime's $119 membership fee. Walmart's service will include unlimited free delivery, including on groceries, and there will be discounts on gasoline. And more than 50 black former McDonald's franchisees are suing the fast food giant. They claim they were pushed by the company to set up shop in crime-ridden areas, and they say they were denied the financial help extended to white businesses. No response yet from McDonald's. The company said last month it would step up efforts to fight systemic racism. And that's your Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. Now, the dollar dropping to a two-year low, that's giving a bit of a jolter to the markets. Euro strengthening just below 120, and China's yuan also touching the highest since 2019, Tom. The weaker dollar, we talked about it with Julian Emmanuel, giving a lift to prices in commodities such as gold, copper, and oil, Tom.
Yeah, you're right up near 120, but we're not there to that real benchmark. There's no question about that as well. The VIX 25.76 is just remarkable. No question to see that with futures up 11 is just the oddest thing as we roll through August into September as well. 210 spread, I haven't mentioned that today, out 2 basis points, 59 basis points, a big deal in that real yield. Everyone's looking at negative 1.08. Coming up, the Lieutenant Governor, the state of New York. This is Bloomberg. Good morning.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
it does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
We have to stop this horrible left-wing ideology that seems to be permeating our country. And basically it's weakness. It's weakness on behalf of Democrat politicians or Republicans. We don't have problems.
Do I look like a radical socialist with a soft spot for rioters? Really? I want a safe America.
Are you going to condemn the actions of vigilantes like Kyle Rittenhouse?
We're looking at all of it. That was an interesting situation. You saw the same tape as I saw, and he was trying to get away from them, I guess, it looks like, and he fell, and then they very violently attacked him, and it was something that we're looking at right now. And
He may believe mouthing the words law and order makes him strong, but his failure to call on his own supporters to stop acting as an armed militia in this country shows how weak he is.
Thank you so much. What a great thought that was. Great set of images of Mr. Biden and Mr. Trump as well. We need, particularly for our international audience, to explain the in-betweenness of Kenosha. Yes, it's in the acclaimed movie Wayne's World, but the distance from Chicago to Milwaukee is about partitioned halfway there by Kenosha, just over the Wisconsin border. It's where AMC built cars for years. It has had a unique character, to say the least. Kevin Cirilli knows all this, our chief Washington correspondent. Kevin, who will the President of the United States speak to today in Wisconsin when he goes over the border to Kenosha?
Well, his advisors would say that he is speaking to the entire country as well as to minority communities in terms of where this is going. But just like Democratic presidential nominee Joe Biden sought yesterday to go to a Rust Belt portion of Pennsylvania and speak to suburban swing voters, President Trump also is going to be making this speech with an eye toward those swing voters in suburbs. I was struck just how Biden yesterday, in making his address, spoke in a portion of the state, Connor Lamb country, a portion of the state that really is where the president outperformed in 2016. So the politics here on both sides very much amplified around this issue.
And right now, Kevin, we're getting great analysis. The Washington Post 538 Bloomberg about the state makeups as well. I want to go back to the suburbs. 538 with a great essay on Minnesota and the shocking reality that it's not the Minnesota of Mr. Trump's youth, or for that matter, Mr. Biden's youth. Where will they battle in these critical states? Is it as simple as the suburbs, or is it more nuanced than that?
It's a little bit more nuanced than that, because at the same time, there is a large portion of political advisors surrounding both candidates who are seeking to amplify the base of each movement. And here's what I mean. We talk a lot about mail-in voting and just how crucial that is going to be of an issue. In a state like Florida and North Carolina, for example, these are states where the Democrats want to see early mail-in voting because they feel, especially as it relates to city voting, that is going to benefit them. And so they underperformed in early voting in a state like Florida in 2016. So by talking and having this conversation about an issue like that, it's poised to get out the base for the Democrats. In contrast to that, the president outperformed in rural America in 2016. And so he wants to make sure that every which way the agricultural sector is turning out for him on November 3rd.
Kevin, yesterday, JP Morgan says prepare for a rising chance of President Trump being reelected. How did you take that? What do the polls tell us?
Well, the polls have the president's approval rating amongst key constituency groups, not nationally, key constituency groups have narrowed following the conventions. It is somewhat typical to see a convention bounce, as it's referred to, Francine. And what you're seeing is the president in swing states, especially as it relates to issues pertaining to law and order, which is something that the Republicans have been able to reframe a debate on, have been able to maintain. The president also enjoys incredible enthusiasm amongst large portions of the Republican Party. For all of the former Republicans who backed Joe Biden, there doesn't appear to be making a dent in the way that the Trump campaign would have liked. However, I would also note that the base, according to other polls, for the Democrats is also significantly amplified, especially over the last few weeks.
Kevin, when you look at, what people will vote on come November, will it be COVID and the health crisis, or will it simply be on the economy?
The polls would suggest that the number one issue is still the economy. And the polls would suggest that the economy is lumped in to COVID-19, and that voters, when they're thinking about the economy, are also making a decision on COVID-19. The two have become incredibly interlinked. As we continue to move forward, as the vaccination headlines heading into the next few weeks about whether or not they're going to get FDA approval and the like, as that continues into the pipeline,
Kevin, it's a culture war out there. We have Pittsburgh. We have Kenosha. Are we going to move on from law and order to these other important topics, or is this the issue as it was in 1972?
Well, no, I think it's well, first of all, I think we're going to be talking about this until November 3rd. But I think that the polls now would say that the economy is still the number one issue. And I think, what the conversations that I'm having, what I'm hearing is that the economy and COVID are going to be interlinked heading into November. It's not going to be, an either or issue vote.
So you're saying law and order is going to be off the radar midway through October?
No, it's not what I said. I said that law and order is going to be an issue. I said, but also the economy and COVID-19 are going to be interlinked in addition to racial inequality.
Kevin Cirilli, don't be a stranger, just brilliant. Thank you so much. Our chief Washington correspondent here on this important day, the president traveling to Kenosha, Wisconsin. With our first word news in New York, here's Ritika Gupta.
Thanks, Tom. Continuing with that, President Trump heads to Kenosha, Wisconsin today. His trip takes place a day after he suggested that a man arrested for killing 2 protesters in Kenosha last week may have acted in self-defense. At the same time, he criticized the killing of one of his own supporters in Portland, Oregon over the weekend. Meanwhile, Joe Biden accused the president of fomenting violence, and he rebutted the president's convention speech that portrayed him as a socialist who is soft on crime. And the Trump administration is canceling contracts for ventilators with 3 companies. One is a $650 million deal with Royal Philips that was signed in April. The company supplied only a fraction of the 91,000 ventilators the U.S. had asked for in the midst of the pandemic. A government spokesman says there are 120,000 of the devices in the strategic stockpile. And the latest border clash between India and China points to a long-term conflict. India says its troops were able to stop a push by Chinese forces to claim more ground over the weekend along the disputed Himalayan border. Both countries have moved thousands of troops to the region, along with tanks, artillery, and fighter jets. And Elon Musk continues his climb up the rich list. The founder of Tesla passed Mark Zuckerberg yesterday and is now the 3rd richest person in the world. According to the Bloomberg Billionaires Index, Musk is now worth $115.4 billion. Shares of Tesla kept their rally going following a forward stock split. They're up 496% this year. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Now, up next, Andrew Murtha, Johns Hopkins Vice Dean for International Research Cooperation. We continue tracking COVID-19. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Tom, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts and topics from public health to international affairs. Well, joining us today is Andrew Murtha. He's Johns Hopkins Vice Dean for Faculty Affairs and International Research Cooperation, and, of course, SAIS China Studies Program Director. So thank you so much, Dr. Murtha, for joining us. What are the differences between some of these vaccines to fight COVID-19 around the world? We have good news about AstraZeneca. How do they differ from the Russian vaccine to the Chinese vaccine?
My concern is not so much about the differences between the various vaccines. It's the delivery systems once they're actually available and online and ready for use. What people are often talking about the situation with China is that they're afraid that if China produces the vaccine first, that China is in fact going to withhold it from the United States. I'm less concerned about that. I'm more concerned about the efficacy of the vaccine in the first place. Second place, I'd be afraid of the degree to which the delivery system would be able to fill demand. I imagine that the kinds of decisions that would be made in terms of distributing the vaccine worldwide would be really a political decision. And right now, U.S.-China relations don't necessarily put the United States in a particularly good spot.
Yeah, Professor Murtha, you make a good point about the distribution. What are you most worried about? Is it, once you have the formula, so the vaccine, is it the refrigeration? Is it how you get it to to the people? Is it the infrastructure that these vaccines need to be used?
It's partially infrastructure, but I think it is things like refrigeration. It is things like the poor regulatory framework in a place like China, and it's also, we've seen this throughout the life of the vaccine, that local governments, local laboratories, local industries working on combating COVID, they don't like to give bad news to their superiors, and so as a result, they oftentimes, we see this pattern everywhere in China, where you don't want to give bad news to your superiors, so you give them what they want to hear. And if it's not effective, in this case, if the vaccine is not as effective, or if there are kind of more than the allowable number of bad samples within a particular batch or something along those lines, that they would pass those along and hope that nobody notices.
Dean Murtha, good morning. Tom Keene in New York. We are thrilled to have you here today. I guess there's not time to talk to you on Cambodia, where you are without question the nation's leading authority, but I would switch east to Taiwan and the burgeoning tensions there. It's you as the head of the China program at SAIS. Do you believe that the Hong Kong process of the last 90 days will have an effect on Taipei and their relationship with Beijing?
So I think the answer is yes. The question is, what is that relationship going to be? And given the just announced trade agreement with Taiwan yesterday, I think that's going to complicate matters and may increase tensions on the one hand, but might also increase the United States' jumpstart the relationship with Taiwan, which has been somewhat moribund for some time now. I don't know what kind of positive effect it's going to have on Hong Kong.
Well, I mean, these trade tensions, Andrew, that you're talking about, how do they, I guess, hamper, you know, the ability of countries to work together to find and fight COVID-19 formulations?
Well, I think I think the trade tensions are in some way kind of parallel to what's going on, but you know, what the main problem is. I think what the main problem is a general distrust and lack of international institutions like the World Health Organization, and kind of letting domestic politics drive our foreign policy. And when I mean our, I don't mean just the United States. I mean a number of key countries. You know, one of the real tragedies of COVID-19 is this notion that even when tensions between the United States and the PRC are at the highest they've been arguably since 1972, there are certain policy areas where we should have been able to cooperate and bring kind of our two countries' vast resources to bear. Things like anti-piracy and things like working together on global pandemics. And certainly, in the case of the latter, both of the two countries in question have fallen short. And we've basically made the WTO, which has not been completely blameless in terms of mistakes at the outset, but we've made that more of a punching bag instead of a neutral space where we could work together and develop vaccines potentially more efficiently, develop protocols that we could use globally and nationally, and be able to depoliticize this problem, none of which has come to bear yet.
Thank you so much for all the insight. Andrew Murtha there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up on Bloomberg Surveillance, Gabriela Santos, JP Morgan Asset Management Global Market Strategist. So she's coming up at 8 a.m. in New York, 1 p.m. in London, and this is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with a 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed, but The good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, the Hong Kong Exchange has kicked off its flagship Biotech Summit. The virtual event comes at a time when healthcare-related listings in Hong Kong have surged to a record amid the COVID-19 pandemic. Hong Kong Exchanges and Clearing Chief Executive Charles Lee spoke exclusively with Bloomberg's Heidi Strout-Watts and Sherry Ann.
China finally, just literally 4 years ago, brought the entire drug administration system into exactly the same, almost as FDA. In fact, they call themselves a CFDA. That reform essentially bring China's standard of governing drug administration, pretty much the same with the U.S. So that reform set the foundation for us to be able to, again, take a huge reform in the biotech sector in terms of listings. It was a great, event. It's a milestone. We never thought COVID-19 is going to hit us. But now, looking back, I don't know how we could cope without this new sector that is allowing so many companies just to join the race, finding a vaccine, finding therapeutics, and finding solutions.
So what's the edge for Hong Kong then? Because we know that China has domestically also been deregulating to make it easier for some of these, particularly unicorn companies, to list domestically on the Star Board, or making it easier for them to list on the Chinex as well. So what's the differentiating factor for going to Hong Kong?
Well, we have always, for the last